I've been a bit out of the loop. How's the what's her artwork? Have you been in touch with Alex? Has he been able to upload it to OpenSea yet?
As far as what I've heard is that he's slowly working on it. Right, he's going through each piece of art, literally each piece of art, and making sure that it abides to the registration standards of OpenSea and those types of platforms. And it's arduous work as far as what I've heard from him, which was, I don't know, weeks and weeks ago. But I mean, with all the stuff that he's doing, I'm sure that he takes some of his free time and puts it towards that whenever he does get free time. I just know that he's super busy, and I hope that not that I hope, but I know that he's taking time amongst himself to go do some fun stuff every once in a while and get his mind off of all this stuff that's going on. But it seems like he's making great strides when he does put his, the elbow grease down and starts doing some stuff. He's collecting a lot of data and trying to make sure that whatever he's producing is worthwhile to spend his time on, which is really good to see.
We've got 22,000.
Yeah, there's a lot of them. I guess as Wattses are being burned, there's less work for him to do, but still a lot. Okay, I suppose we can go ahead and start just taking a look at stuff, I guess. Answering some questions.
Executioner. I'm here.
Hey, Crispy, how's it going, man?
Hey, yeah, how you doing? I said that because of the note you dropped in the chat. YouTube.
Yeah, you're about one of the only ones that I actually come in when I see that there's a notification on my phone that you're gonna be streaming 30 minutes prior, and I try to make it a point to at least join in and see what you got going on. I love your updates, so.
Yeah, appreciate it, man. I appreciate the support. This is this game of social media kind of is a pain in the ass, but it's a freaking hamster wheel of you got to make more content for people to look at stuff so that they click like junk,
Yeah, that's why I do this. There's no like to click. There's no.
Yeah, I can see that. Yeah.
It makes me feel like I'm not absolutely obligated necessarily to create more content or newer content. I can just kind of do it how I want to do it when I want to do it, and I'm good with that.
Yeah. Well, I'm not comparing myself to the big man, but I understand why Richard said some of the things he said along the way now. A little bit better anyways. Because if you have a message and you're trying to get it out, you have to somehow get in front of people. And, maybe that's not exactly what you wanted to do, but if you want to get the message out, you have to.
Yeah, exactly. And then make sure that you're not overworking yourself with every time somebody gives you a suggestion as to, could you add on to this or could you do that? But yeah, I mean, it does give you ideas for more content, but it doesn't necessarily mean that you have to provide it, either. I mean, you're different. You're different though. I mean, all your data, you've got so much damn data that it almost doesn't even make sense as to when, why, or how you would go about distributing it to any individual specifically. You kind of have to overlay the average of what you have and to be like, well, this is what I got. Do you guys have any questions? And I noticed that there are a few questions, but for the most part, when you're done going through it, you've pretty much covered everything. So it's hard to have questions. You do a pretty good job. So I appreciate that.
Oh, thanks, man. That means a lot coming from you.
Yeah, man. You don't get that type of stuff in other communities, in other ecosystems. It's just not readily available. So it's nice to have you doing all that type of stuff for sure. All right, let's go ahead and screen share this. If you want to, Crispy, at any point in time, if you want to interject and do a screen share on some data that we're going over or something like that, please, by all means, let me know, and I'll let you pull up a screen on some stuff too, because I noticed what was it, maybe 3.5 weeks ago that I decided to do my last analysis, and I ended up having to go to hexfire.io on some of the questions to kind of look at some stuff as far as share rate stuff was concerned. So
Yeah, sure.
if we get into that, by all means, please do. All right. So this week, I decided to actually do an analysis poll of the liquidity versus price data on the 0.3% pair and the 1% pair. I did this morning, so not really sure if liquidity has changed much. As you can see, we were over here a couple weeks ago inside where it's really thick. And now we're getting some actual support up in the higher ends. This side of the red line, I'll pull up the price here in a second, but this side of the red line is all hex that's available to be able to purchase. And as you make those purchases, price will start to go up. This is USDC. This is recent hex turned into USDC on these pools. As you make sells, this is actually selling support, right? So you can actually make bigger sells into this. As this starts to dwindle down, you can buy less and less and less, and price will start to move faster and faster and faster through it. This will allow for you to sell into these as price goes down. It'll hit this, and price will start to slow down, moving downwards. So there's some actual price support on either side. All this area here looked a lot like this here, really, really low, thin liquidity, to the tune of about, I don't know, $3 to $4 or $5K, $1,000 worth of USDC per tick. If I can zoom this in here, I'll show you what a tick looks like. Each one of these is a tick. As you can see, I hate having to do this. Right here, this will tell you how much USDC is locked within this tick here. So that's how much support for sell pressure that this will actually be able to afford demand in. If somebody sells somewhere around this amount there, it'll push that price down through it, and it'll go to the next tick, where that next tick is about another 20,000. The next tick is about another 20,000. Oops, I did not mean to do that. I'm trying to lock it in. When I go through these ticks, this is what I'm looking at here. This USDC locked amount. This will show you the price as you sell into it as the price goes down. As you can see, we go to 13.7, 13.8 for hex. Excuse me, I'm sorry. I showed you the wrong thing. It's this for price. Sorry. The top one for hex price, not this one. This is how many hex that you can get per dollar in there for USDC. As you can see, as you go this way, the price actually goes down. We were bouncing around over here as of a couple days ago in this area. And then now as people put some more support up ahead of it, as you can see, price went right up through it and then went into the lower volatility areas, supporting price movement to the high end and also supporting price movement to the low end, which is good. It's good to see that type of stuff happening. If we look at Hedron, though, here's the 1%. The 1% was just this stack that was here. Nothing. There was nothing over here, way down here, and nothing way over here, which this would also be price support to the high side. And then this is all price support to the low side. When price goes down, the price will slow down through here. This is between 5.5 cents and 7 cents. And here is 7 cents, right about, this is where that big old stack is sitting at, right about here, to about 5.5 cents, which is right about here. So that big old support on the 1% sits right here. And that's only, how much USDC? That's a lot. Each tick is about $190,000. Here is about 185, 190,000, 157,000 per tick. So that's a lot of, if you wanted to sell right now, you know what? I'm not even going to say that. I don't want to give anybody financial advice. But anybody that was doing it, it would just kind of pull back into here, and it would be happy being back in here in the 6.5 cent range. People buying into this are going to get a lot of slippage. As you can see, anything past 7.5 cents on the 1% pair, this is with the USDC, that they're going to fall into this too. Real low amounts, which is roughly about 12 to 13K in these ticks worth of USD dollar amounts, meaning that you'll spend maybe $10,000 to $12,000 and you'll get about a little less than 200,000 hex for it. As price goes up, you'll get less, obviously, right? Per dollar value to the hex that you'd gain. So generally, I don't go look at one like this one between 5.5 cents and 7 and come over here and say, well, 7 to 5.5 cents is actually where it's filling in here. These ticks here are only about 30K per tick. It's wide, so there's a lot of support, but 200K, I mean, it would be double the size of this candle here. These candles, these ticks, not candles. These here would actually be like, is it going to do it? I wish this was a lot more smooth than it is. Oh, it's not even going to go back. Anyway, it'd be twice the size of this. It'd be way up here. A big huge block that would go from here to 5.5 cents. Way up here to the top of the screen. So it's quite a bit of support on the back end. So that's good. That's good to see. Let's go ahead and take a look and see what that looks like. We got the 0.3% and the 1%. Hopefully everybody can see this okay. This is the 0.3%. Like I said, this is about 20K per tick going through here. This is only about 3 to 5K per tick going through here for each and every single one of these little tiny ticks that you can barely see in here. The 1% pair, it has some pretty significant support on the downside here. As you can see where that wicked at right here, there's a good reason why when you go from this type of low volatility into this high volatility, that when price goes up into this, that it pulls back. It wants to, this red line, this green line, this price right now wants to settle back into this here. No matter what type of volume that you're putting through it, generally what you're going to notice is an RSI spike. I had to reset this, so just give this 1 second. Okay, so go to the daily, come to Fibonacci, RSI. Yeah. As you can see, with the RSI, it's even starting to get overbought here. Where generally sellers are going to see that this is a good point in time where they can start selling into it. So as it goes up, spikes, they're already seeing these things. They're not looking at any of the rest of the data here because they don't, more than likely, they're not paying any attention to it. But as you can see, that there's plenty of availability for liquidity, not a shit ton, but there's some there. This is particularly volatile, but it's being supported by all of this, right? Really, this is, I kind of got this a little stretched out, a little wrong here. This here is actually about 5.5 cents up here. This is actually, the bottom of this is actually supposed to be up here, supporting right pretty much where you see this candle at, right there at the bottom of it.
Who this?
Is where this is actually supposed to be. I tried to manipulate it, but I really couldn't. I figured I'd just tell you guys, right? It's supposed to be a little more scrunched up in there. If I took a snapshot of this right there and moved it up there and then spread this out to the bottom, then that would it'd make a little bit more sense, but I didn't want to go through all that. So as people keep buying, then price is going to keep going up. But unless we actually see some market makers actually go take some more of their hex and actually put it on the high side, it's probably not going to support that, right? If it stays like this, like I said, this is about 3 to 5K. If you're making your purchases within 3 to 5K, you're probably going to affect the price, moving it up into the next ticks higher, maybe losing a little bit of value against yourself, but still available to make your purchases, right? But it's also meaning that people who want to sell large amounts can't, right? If it's anything more than 3 to 5%, they're going to actually lose a lot of value by pushing the price down until they push it into here. As soon as they push it into here, that price is going to start getting a lot less volatile, and slippage is going to be reduced quite a bit. Same thing with this down here at the 6 cents, more or less supporting a lot of the 6 cent range. That is not me, by the way. Whoever's flushing their toilet, could you please mute?
Doctor, your microphone's on.
Okay. Any questions that anybody has right now? I'm trying to, I don't know, cover it as best as I possibly can. You know, we got pretty significant amount of support here on the underside. Price will fall back into here and pretty much get stunted and stopped. As people keep buying into it, it'll keep pushing it right back up to about 7.5 cents. As I've noticed, almost as soon as market makers are adding more support by adding hex and USDC right around the price is actually responding very well and moving up further and falling back into it very nicely. It's like a catcher's glove, you know, catching the price exactly where they'd want it to be caught at. So whoever the largest player is of the market, whoever has the most assets that's applying those types of assets, are gaining a lot of control of the price right now, especially with the price being in these ranges, where there's not a whole lot of assets within those particular ranges right now, except for right here. If somebody was going to if somebody really wanted to sell hex at an average, they could, right? And price would probably actually, I don't know why exactly. I mean, V3 launch is not pulse chain launch. So, I mean, all it is just a test net and people get excited about it, which, I mean, it's fine, I guess, but it doesn't really make a whole lot of sense. It's not going to affect your market really, but it does in hex for some reason. Anytime Richard tweets, turning into a hex ecosystem Elon Musk, which is fine. But yeah, if you wanted to sell as an average from 7 cents, 7.3 cents, you know, all the way up to 11 cents, and you went and added $100,000 within that range there, and you supported higher pricing, and you wanted to see 12 cent hex, and market maker came in and threw that in there, and other traders or investors that were speculative on higher price, they would have really low slippage and they'd be available to push that price all the way up there. And I think that it would. I think that it would. Right now, though, we just don't have that type of support. I see that support is building around it here. Like I said, all of this stuff right across through here until it gets down about there looked like this a couple days ago. So as you can see, it's building up. People are getting more and more confident with being able to put your assets ahead. Most market makers are trying to just garner fees. They're not really actually looking to sell or buy when they pull their ranges. So if a market maker is concerned that they'll go put a fuck ton of their hex up between a certain average range and that price is going to go up through them and stay above them, then that's putting them at risk. So they have to garner some type of confidence to know that even if price did go up, that it'd come back down, that even if the market did get overheated, that it would cool off particularly quickly. That's part of the reason why I was showing this RSI here for this. It's overheated. It's pretty heated right now. So I mean, you'd rather see it come back down to these levels here, cool off a little bit, but maintain price. That just takes time, right? If we went a couple of weeks and we just kind of move sideways, the RSI would calm down. As you can see that right here, you know, instead of continuing to move up, it just went sideways. That's good, healthy market movements that were there. And then we just started going up. And a lot of this had to do with these support assets that were here at the time and them moving around along this pricing here. So, I mean, even giving you guys this information, I'm not available to tell you where price is going to go, how it's going to go, when it's going to go there. I can just pretty much tell you that as of right now, we don't have a whole lot of price support above where we're currently at. As a matter of fact, you can pretty much see, the volatility started right here. This is why that wick was there. You know, we went into that and came back down, which I'm pretty much showing you right here where it was at, right here. And then obviously it gets a hell of a lot more volatile here above 7.5 cents. And here too, there's a little bit of support, but not much. It just gets more and more volatile. You can buy less and less assets as the price goes up. Same thing here. So price on this chart for the 0.3%, it's showing that the market makers that are in there, this is the majority here. All these assets, USDC and Hex is actually about double what this actually is, maybe a little bit more.
Hey, Executioner, what's the 1% and 0.3%? What does that stand for? I'm sorry, that's a super good question.
Fees. That's how much fees that whoever's providing the assets, how much fees out of the whole pool that you're going to garner. You're going to garner 1% of your 100,000 that you put in, and you're going to garner 0.3% of your 100,000 that you put in. Now, this pool, man, I wish it would stop doing that. This pool here has about twice as much locked as this one does. So when people go to Uniswap and they use the router, it's going to pretty much try to go to this one because it's got the highest amount in there, right? Is it going to cause more slippage ahead of the price if the price tries to go up? Meaning, like, as you can see, when price goes up, is there enough ahead of this? See, there's only 169,000 hex above into the next price tick, 167,000 hex in the next price tick. If you're trying to buy 200,000 hex, is it going to try to move the price up further on this one particular pair? Which it probably wouldn't, because this is the 1% pair. And as I was showing you, the locked amount was only 2.8 million. Here's about 5.4 million. So is there enough hex to suffice for it by trying to move this one up, so it'll actually affect price less. So whoever this particular character is that's inside here is only going to garner 0.3%, but the router is going to favor this pool. So having 0.3% may be more advantageous than even the 1%. Even though you're trying to get 1% of your fees, it's all about volume. How much volume is coming through this particular 1% pool? How much volume is actually coming through this particular 0.3% pool? As you can see, there's a hell of a lot more volume because that router chooses this one more than it chooses this one, right? So if you don't have any volume coming through and you're providing on this 1%, then you're not, it doesn't matter that you're getting 1% of fees. It doesn't matter because it's not even sending volume through to you, right? Here there was, because price was lower and it moved up through it, which is the representation of price was lower and it moved up through it. So when there was the price going through this here is the reason why you see the volume uptick here, right? But when the price goes out of this, like it is now up above, right? And it's a lot more volatile, but yet, see, so there's about 13K USDC here and where it's currently at, meaning that this 169,000 hex that's in the next tick up is about $13,000. So if you're trying to spend more than $13,000, then it's more than likely going to continue what it's been doing for a long period of time, right? Using this particular pool, which 0.3% is going to actually garner you more fees. So this particular tick here is $20,000, where it's currently sitting at. The next tick above it is 13K, and then 166,000. So there's more support even on this particular 0.3% pool than there is on the 1% pool. If these guys here decided to actually move their assets up here, right, which they're going to take a loss because when they put them in, they were taking an average of price from here to here. And if they were to close this down and remove all this and then move it forward, then they're going to be at a loss until that price goes through their ranges again, which they may garner fees. The 1% pool is more, in my opinion, is more of a tool, right? If you just want to get some shit done. It's obviously not going to really use this pair as much to garner any fees, but you're not going to be here to garner fees. You're here to sell for an average. That's what this would be used for, in my opinion. Or if you just wanted to allocate funds at a different range to be able to try to connect the two pairs together, like what you saw with the Hedron buy sell wall from the OA at the time, right? It looked like there was a lot of total volume locked, but unless price is actually in here, then those assets aren't doing anything. They're just sitting there. It really does nothing unless the price is actually in the range to be affecting the price at all. So hopefully that was a good enough explanation as to what these actually do, the 0.3% and the 1%.
Yeah, absolutely. Thank you.
If total volume locked was on the 1% was higher than the 0.3%, and price, where the price currently was at, was actually in those ranges of assets that were there, then you would notice that the volume would actually look more like this. The router would choose this particular pair more than the other one. They would swap from using the 0.3% pool to more or less using the 1% pool a hell of a lot more. But people like this. People like the 0.3%. So that's where it's going to go.
I'm interested to know how the market makers mitigate like fast moves in the market. For instance, let's say when Richard makes a tweet and suddenly there's like high volume and people buy into the liquidity just above the spot price, and then it doesn't come back. Now, how do those market makers, I mean, obviously they would get impermanent loss if they then move their stacks up or down. how do they play the game if they get caught with their pants down on a move that's fast and moves, above their ranges that they've set, and they can't get back into the market?
Smart market makers or people who are just trying to figure it out? Because there's
Yeah, no, I'm talking about the main market makers who are providing the bulk of the liquidity, and if it moves through them that doesn't come back, especially on a move which is being created by, say, Richard announcing, we're closer to Pulse Chain, or even on the Pulse Chain, announcement launch. How are they going to play it? Are they going to just literally pull all their liquidity and wait for the volatility to stop before they provide more liquidity?
nah.
Because they can very easily get caught with their pants down.
Yeah, well, okay, like let's just say that a smart market maker who isn't being impatient. Typically, they're not using all of their assets to provide the majority bulk of what you see as liquidity being provided on it. So even if something does move, they've got more assets to be able to reappropriate different ranges. So they're typically, what I would say is, those market makers, they're fine with it. They put those assets there. They chose the ranges that they were going to be in generally for a purpose anyway. And if they were only wanting to garner just fees and that's it, then they probably would have went into the V2 side of it, not the V3 side of it. So even the market makers that are in V3 probably have positions in V2 also, where they're going to lifelong leave those assets and keep appropriating new assets to that V3 side, which has a range of 18 zeros price all the way to infinity, where they're always gaining fees. You can try to mitigate some of this through V3 by opening up multiple ranges. I have a slight, I don't know which one it is. Not any of these. Oh, did I get rid of it? There it is. There it is. So you can do something like this, where this is one range that you have that you put in that was all assets. Let's say this is all Hedron. And when you put it in, the price was down. Let's say it was way back at this time when you put it in, because you would have put everything in as USDC. And then this one here, you would have put in way back here. So you wouldn't even have put them in at the exact same time. Even though I have this one up ahead of this one, it really would have looked like this line was way back here when you put it in as USDC for buy pressure, and people sold into you, obviously, when you put it in there, which supported that. And then when it was down here, you decided, hell, I'm going to go to the other side of the swing with some overlap of what I had of, I don't know, a certain percentage, 10, 20% of overlap on top of each other. So that way, when price starts moving sideways through this one, I'm garnering fees. When it's moving through this one, I'm garnering fees. But when it's moving through both of them, I'm doubling my fees. And then you could put in a really small concentrated range here, right? Which you could have taken 50-50 of what you had right in the middle of USDC, and then Hedron up above it. This one happens to be Hedron that I did this on. This is just for visual purpose, right? And you have actually 3 different ranges that are all open at the same time, all taking care of each other, just in case volatility went to the high side, the low side, or was just moving sideways. Right now, this range here had its purpose of trying to actually garner as many fees as possible in an impatient fashion, right? So that way, if price went through it to the high end or the low end, having this one putting pressure to the high side and this one putting pressure to the low side would actually start to push the price towards this concentrated level anyway. So you're trying to force price to stay within this concentrated rate that you did, and you did it intentionally on purpose. Usually you'd use maybe separate wallets to do this, to have one here, one here, and then this totally one there. You could do it all in the same wallets. But then people wouldn't be able to track you as easily if you did something like this, to see that you're trying to manipulate the price in some sort of way. So that way you can garner fees. And then you can pull this range here when you're dissatisfied with it. If it goes out and you think it's going to stay out, and you wanted to reappropriate your ranges, what I would end up doing is leaving this one, and this one. And then remind you that this isn't all my assets, and this isn't all my USDC, and neither is this. I'd have a whole pile sitting over here of more assets that if something volatile happened, then I would leave these three, and then I'd go appropriate new ranges where the new price is at. And then if I wanted to, then I would pull these ones. And then maybe with whatever I garnered from those, where if it went up or down, if it goes down, then obviously I'm sitting here with a lot more Hedron. If it goes up, then I'm sitting here with a lot more USDC. And when I pull those, I could make market buys or market sells to reappropriate myself however I'd like, and then maybe even lower my ranges or increase my ranges, depending on how you wanted to play it. That's why it's so tough to teach people about liquidity and how it works and how people would do these types of things, because it's all really kind of based on the individual and what they want to get done. But you can try to mitigate these things as much as you possibly can, but through collecting data, and a couple of buddies of mine that did an arduous amount of work and spent a lot of money to be able to do a lot of those things, mitigating impermanent loss is almost impossible. Almost impossible. It can be, you can limit it as much as you can try to, but the markets are very speculative. You just never really know what's going to happen, except for, like I said, to the high side. If you see that there's no support up above and price goes up into it, then what you're probably going to see is the price pull back into where there is support, kind of like this, which I think it's funny that people, it's like magic, right? Like the other day when the announcement was made from V3 and we started to see these things happening with these wicks here, that I called this price right here, and I called this price right here. And then this morning, if I would have got up earlier and decided to do this, I would have called this price right here where it would have sat at, which everyone would have seen this pullback happen just like I said it would, and saw this pullback happen to there just like I said it would. And then here I'm now showing you that this pullback is happening, and it would probably come back to down here to whatever that actually is at the price. Go look at it and see. Oh, it already did. Okay. I made these charts probably about an hour and a half ago, so it may have already changed just a little bit. Yeah, you see how it's already pulling back? How that red line was right here when we started. It was in this first lower tick, and then now price is actually looking like it's pulling back a little bit comfortably back into the 7365, which is right here where it would rather be in these ranges. So I would suspect that you right now, with hype being what it is, that you'd probably see price go down, to the low sevens and then back up low seven. And I don't know if this is true or not, but this is generally what we see, especially with the RSI being so high. Lately, we've been kind of teetering across the top of the RSI, which, every time we go up there, a trader sees it and sells it down. Goes up there, sells it down, sells it down. Oh, they must have been asleep or some shit. And they allowed it to go over the 70, and then they just sold it back down, and then people are going back in, which is good. It's fine, because they may have, a couple hundreds of thousands of hex or millions of hex that those traders want to sell. And there's lots of people who want to buy those hundreds of thousands and millions of hex right now, especially before price goes, higher to a point where it doesn't make you feel comfortable, because you're just not really sure, since we're still in a bear market. You still got to be kind of smart about it. I think that this morning there was some earnings reports that came out that suggested that we're still in a bear market. So our 90-day like confirmation of whether we're in a bear or a bull was rejected. So we're definitely still in a bear market. I don't know if you guys are trying to garner information as to when the bear market's over and the bull market starts, that Richard Hart's trying to time the markets and the rest of that shit. Like, if that's not satisfactory to you, me telling you that we're still in a bear market, then, you know, I guess take your speculation however you'd still like to. Don't be affected by whatever I'm saying. I'm not here to convince anybody any different. I just look at the same reports you guys do when it comes to those market movements and things like that. And then these things are pretty obvious to see, the pullbacks, right? Pullback to here, which is obvious. Look at all the support underneath it, right? Price wants to go back in here. It doesn't want to go up in here. There's nothing to support it, right? Same thing here. There's not a whole lot. Even this right here is not, it's ugly to me. I don't like this. I'd rather see this here. I'd rather see this block here get lifted up and smashed right here, and then support 5.5 cents instead of supporting the low end of 3 cents, right? Support this all the way to, you know, maybe 10 cents, right? And maybe if price keeps moving back and forth across through here, that's exactly what we'll see, right? But those market makers are not going to be impatient and move their assets anytime. I don't want to say anytime soon, but they're not going to do it immediately. They're not going to react and respond very quickly, because they have to have the confidence that, you know, that the price is going to stay there. Even though it's volatile through here, it still suggests that price still wants to go back through here, which to get back here, it's going to have to go through all this, which is significant, right? That means price, even though it looks like it's volatile here through these areas, it's like, oh, that doesn't look like much USDC for people to sell into. This would suggest otherwise. So if you get a D01 that comes in, decides that he wants to try to sell, I don't even know how many assets that guy even has, but he may have some stakes that come out to try to sell the price back down from 7 cents to 5.5 cents. He certainly could, right? And then when it gets through here, then you're going to be sitting right back into the top of this one again, which this one will start to support price down to the bottom side all the way down to 3.5 cents. So to me, I'm not trying to speak bearishly here, guys, either. I'm just showing you where support regions are. What this suggests to me is that we could very comfortably go all the way back down to the low 3 cents on HEX. Do I think that that's going to happen with how everyone's all hyped up about all this stuff? You know, that I'm going to assume that not everybody knows how all this stuff works exactly, and how they're, you know, just the news of what's going on is actually pertinent to whether pulse chain or whatever, their copies or their doubles or anything is actually going to be affected to them. Usually people just see green candles and they start buying into them because they think that price is never going to go back down into here. I would say that we do have support down on the lower side, because it's pretty much all USDC, as you can see. Even here, almost all of it's USDC. This over on this side of the red line is HEX. This over on this side of the red line is HEX. And you need HEX. You need HEX in these pools here to be able to people to buy it and actually move the price forward. If there is none there, not much to buy, then price will move through it, but it won't be supported, right? And if anyone comes and sells, it's going to move the opposite direction over this way, just as fast as it moved this way when people were buying. So what I see right now where we currently are at is big players are kind of stunted right now. They're going to have to come and provide their own liquidity in these ranges right now to be able to move price forward. If they want to buy HEX, then they should have already had HEX. They're going to need to already have HEX to come in, add assets to be able to use their USDC that they got sitting in dry powder to be able to buy up into it, to move through their own ranges, unless they want to cause high amounts of slippage, or they need to make very small purchases, just like smaller players would. This is all supporting small players. So if you're buying anything less than 10 grand, then you're going to be good. You're going to be really good all the way up through here to almost 10 cents. There's plenty of support here, even though it doesn't look like a lot because it looks smaller compared to the rest of this. Like, this is supporting smaller players very well. Same thing with smaller players selling. Like, this is their game here. This is all supporting big players to do what they need to do. This is all supporting big players, all on the sell side, which is fine. It just means that, you know, if you want higher price appreciation, you're going to have to see these pools here, or they don't even have to be removed. Like I said, market makers, they don't deploy all of their assets when they go make ranges. They deploy a fraction of what they have while staking, while using the utility of the asset. And they also have it sitting there for their own market buys, sells, and purchases that they want to do. So this is just if this was all one guy, this would be a very big guy. Then this is not everything that they have. As a matter of fact, if this was one guy, this also could be the same guy. You just would never know. You'd never know. But the actual suggestion would be that, as you can see through the ads, that if we legitimately thought that every address that's different was a different person, then you'd see that it's not all one guy. But I don't know about you guys, but I got more than 10 addresses. So this could all be me. Every single one of these addresses could all still be me. So you just never really know who's doing what, why, what their ulterior motives were, what their objective was with the assets when they put them in there. Are they just here for being able to support price? Or are they just trying to garner fees? Are they risking in V3 trying to garner fees? I always tell you guys that if you're trying to make fees in V3, you're taking a higher risk than the rest of everybody else, because you could just do that in V2 and be just fine. V2 is pretty much designed for actual real career type market makers, because you're always in the fees and you're not really risking a whole lot. You knew what you're getting into. You set smaller ranges. Like, if this was one guy and he just wanted to be in the fees and garnering fees, well, right now he's sitting in USDC, and he could have, if he would have just kept his hex, then he would have been on a lot more profit with it being up here than he ever was putting any of this stuff here. So whoever these folks are, which is probably not one guy, almost 100%, 100,000% for sure that this is not one person. But for mentality's sake, it's good to just give a perspective, I guess, on it. That this guy is worried. He's wondering what the fuck he's going to do, right? If he had no extra assets sitting on the side, no dry powder sitting on the side, and this was him deploying everything that he had, thinking, oh yeah, I'm going to garner, a share of the $21,000 worth of fees that were coming in every day, and I'm in the money right here. And then suddenly Richard Hart, like you said, makes an announcement, and price goes up here where it's thin, and he's going, well, shit, if I remove all my liquidity and I go make a purchase because I don't have any assets left, this was all my hex. Now it's all USDC. Now I have to take it and buy it at 7 cents when I, sold it all between 3 and 5 cents. Oops. That means I only got an average of 4 cents. Now I've lost almost half my value because price is up here. So now I could only, if I did remove this and go buy a bunch of hex so I can keep playing the fucking game because I made a mistake and I used all my assets, then I'm going to lose half my value, and this stack here is going to be half of what it was. So hopefully that's not the case with these people that were here, and that what they have is way more than what they actually deployed here, and that they can go add more support if that's what they really want to do. They'll be happy with their 4 cent average that they made here. And then now they can go ahead and try to make a higher average here between 7 cents and, let's say, 12 cents, right? So that would be 9.5 cents when price went to 12 cents, that actually would have sold all that large amount of hex here. And then, so you had an average of 4 and an average of 9.5 here, which you may be particularly okay with. You didn't have to actually go market sell any of those assets. You just let price move through it, and you removed your range. You got what you wanted at your average of 4 cents and your average of 9.5 cents. And you didn't actually, you supported the price instead of affecting the price itself. Like if you went and sold right now, obviously price is going to go down. Well, if you just provided liquidity and let price move through you, then you remove your range. The only thing that's going to affect is volatility. That's it, right? Imagine all of this right across here, this big old block above it, all got removed, and you had the same amount of volatility that's here. Then as you see these green candles that are there, any of the sells would cause the same thing to happen this way too. So it could have went the other way, where we went right back down to 4.5 cents as opposed to being up to 7.5 cents. But right now, what I'm seeing is that we've got a majority support here between 5.5 cents and 7.5 cents, and a majority of the support here all the way down to 5.5 cents as well. So you'll see price actually move slower. So as soon as price gets to right about here, you're going to start moving sideways again. Particularly, you'll actually start moving sideways anywhere between where we're currently at and 5.5 cents right here, in between here, until we actually see more people putting more assets up above the price up here and more assets up above the price over here. Then we'll actually see higher price appreciation in those ranges up here, which is actually what I would be showing you here, where you'd see these blocks here supporting a higher price as it went through. Some people would see like a bunch of hex get put here above the price and be like, oh, that's a sell wall. No, that's price support. That is hex being, it's like, here's where all the bread was at, and here's where all the bread is at, where all the groceries are at, sitting on the shelves here. And what you see ahead of you is less and less availability of buying bread. So it reduces confidence, but increases volatility. Thank God that when you buy bread, it doesn't increase the price as you buy it, right? The same thing was when you sell it. Generally, people don't sell it, but probably a bad example. But I think for now, as far as what we see, that price is supported right at around where we're at, and you'd see this price moving around between, like I said, about 5.5 cents, which on this chart is right about here, to where we're currently at. 5.5 cents here, which, like I said, this is actually here to 5.5 cents. This bottom wrong. I just kind of, like I said, I didn't manipulate it. It manipulated itself. And we'd have price support between here and here. So you probably actually see price going around there until I don't know, somebody adds more hex up above. Right now, what I'm saying is true, that price will go sideways between these ranges, 5.5 cents and 7. But as soon as people go add more assets above this current price, supporting it, for price to actually move through it, and for people to actually have less volatility and slippage as they're making their purchases, then what I just said would be technically incorrect. But as we can see live right now, what I'm saying is correct. So that just pretty much is what it is. All right. Hedron, I could give a comparison, I suppose, of 3 weeks ago liquidity to now. By the way, I'm as you guys can see my screen, I'm not looking at the Telegram. So if you guys are sending me DMs or putting shit in the chat, like, I have no idea. So as you can see, we still have our lower support of 5 zeros and a 1, just like we did 3 weeks ago. Prices pretty much the same as what we currently had. This is there's a lot more assets to the higher end. We're still about, it hasn't really changed. It's pretty much the same. This is pretty much exactly the same as what we had, except for underneath the price, there was a little bit more support for selling. And it seems like those assets have gotten moved above the price to support it. So those people may be taking the average of what they had here and they just moved it up to increase that average. So that's good. This is actually really healthy. This is what we currently are seeing now. The one on the left. Let me reload this, just in case it's changed since we started talking. This is actually supporting it. There's a lot more Hedron there for people to buy. Slippage and volatility will slow down as price moves up into this, which is good. Like in the hex. Oops. Let me pull this one back up. As you can see here, when price went up, it fell back down because there was a lack of assets. That is not what will happen here. As price goes up into here, it's supported. So if we get a big green candle that goes up into here, it'll stay a green candle. Even if people start to sell, it won't wick as much as this does. So there's a lot of price support until you get, I don't know, probably around this area here. You won't see much of wicking happening. So we've got pretty good support to about 5 zeros and a 3.5. But we definitely have support all the way up to almost losing a whole zero. So I'd say that this shows me that the market makers are pretty confident that they want to support these prices as it goes up. That could also be because Hedron is highly inflated and there's a lot of assets that are out there, and people being less worried about risk, that they just still appropriate support for those prices on the higher end anyway, regardless if there was a volatile movement up. Right now with liquidity, as you can see, that we haven't even hit our lowest end of volatility, or we're about to hit our lowest end of volatility where the majority of the assets are currently at on price. This would also suggest that volatility has a sharp drop off here. This dollar sign and this here is not in the way of stuff. This open space that you can barely probably see on your guys' screens is actually where the slope off drops off completely. So there is zero support for 6 zeros any longer. And as people try to sell into Hedron right now, it would cause red candles, bigger red candles, but it would wick just like this. It happens on the low end too, right? You would have a wicked red candle right back up into here. So this doesn't support sell pressure. This, what I see here, is only supporting buy pressure. Here right now, it's not supporting too much buy pressure. It's actually supporting a lot of sell pressure with Hex versus Hedron. Hedron I like to see. This I would rather see more of this on Hex. More Hex assets above the price. But I mean, sentiment in a bear market would suggest that this is probably the smarter play when it comes to Hex being so volatile and can be manipulated and moved just with one tweet. Alex tends to be pretty quiet right now, which is good, right? Since these are connected together through liquidity, it's best to probably just allow for this to move and its volatile movements, and then just let this pull itself up with it, which it recently has been doing. As we go to Icosa, when I go to Icosa, you'll see the same thing happening with price just moving through. We can look at volumes here too. Oh, that's Hex. Got a good amount of volume, not as much as we recently had, but these were probably points in times where the auction was causing for people to get a front run on it, leading. And this volume also is sells too, sell and buy volume. So it doesn't really just like separate those as to what was what, right? Unless you go look at the actual swaps for whatever they were. Volume is still volume, no matter what you do. So there's a lot of support to the top, which this is the slide down to volatility, meaning that you'll start to see candles being bigger as it goes through, smaller up here, a little bit bigger, a little bit bigger, a little bit bigger, very big, extremely big. If it went to here and people kept buying in large amounts, more than, I don't know, $2,000 worth of Hedron, then it would really push the price up, really. But then it would just wick right back down to here again, just like what we're seeing with Hex right now. Go up into these high volatilities and then falling right back down to where this is at. Because, I don't know, any sells just pushes it right back down into here. Not a whole lot of support for sells through here. You do to about right here in this range, which, let's see, where does that fall off at? That would be a fall off of 580, 262 of about 50172. So I keep doing that. So this is about where your volatility to the bottom side really starts to pick up. So we've got support to the low side down to here, but then again, we've got support on the high side in the same, let's just say here to here. Oh, 5 by 3, 05977. 0.50326. So 07 to here. This is about where the majority of our support is currently at. Right through there. So there was support. There was support way down here, but as price went up, it looks like all the market makers moved all their assets up above to start supporting these new ranges after this big jump had happened the beginning of February, the end of January. And then now we're sitting very comfortably between here and here. So this is where I would see the ranges moving right now, just for now, as long as I see between here and here, with price actually being able to move through these ranges with it being very healthy, not incurring a lot of slippage where we notice people come in and complain about those types of things all the time in Icosa, because Icosa is, there's just not as much, there is a fraction of the amount of Icosa that there is Hex, and there is a fraction of the amount of Hex as there is Hedron. So to see really healthy availability of liquidity in Hedron is what I would expect. To see conservative market maker movements, meaning that even if price did go up, you notice that they kept it here. They didn't move it all forward right away because they're just not so confident that price isn't going to come back down. Really about the only confident move that you could make, as long as this guy's still here. God, it would suck to move to be the guy that's, what is this, 5.5 cents? Yeah, 5.53. Where are we here? 3 to 5.3 would put us right about there. So it would suck to be the guys that are back here to go move all this up here on top of this guy pretty much, and then watch this guy remove all this liquidity and cause the volatility that could possibly push the price down lower than the 5.5 cents, which is right here. If it pushed it down lower, then it would be really volatile to the underside. And then they would be out of the fee range here. So I would say that probably what's going to happen, you'll notice maybe some of this being removed little by little and being appropriated up here, or you'll see this stay for the most part as people remove little by little and then take some of the liquid hex that they have. Maybe they ended a stake or some shit, and start appropriating it ahead of the price and then watching the price move through it. If they have any liquid USDC, these guys are doing good, right? If they were going to use this as a limit order, if price actually went down through there, they'd be the money makers, garnering all their hex back that they originally had, which they're now wiping their brows of nervousness at that point in time, going, thank God that I don't have to pull it and incur any loss. If they weren't happy with the average of, what did I say, about 3.5 of about 4 cents that they would have sold all this at that point in time, unless they had these assets up in here too, which would increase their average from 3.5 cents to 7 cents. So, I mean, maybe about 5 cents, only 1 penny of an extra average, which would have been something that they would have known that they were doing, hopefully, previous to doing it. So, hex, I see this is understandable how this is. No worries, no concerns. Hedron, very, very, very healthy. Not supporting for the sellers, but definitely supporting for the buyers. That's really, really good, really healthy. Not much slippage, very low slippage through here. Good. I'm liking, I don't know. Since I started doing this about these live VCs, sharing my screen about a month and a I have only seen good support. So pretty happy about what I'm seeing here with Hedron all day, every day. Icosa. Let's take a look at this bad boy. We've got good support for Icosa all the way up to probably about $1. Around $1. 95 cents, 90 cents. Pretty good. Sell side, about the same. There's not really a whole lot of lack of support on either side of it. And it makes sense, right? Like, there's not a whole lot of assets, so people might be a little bit more reserved, more conservative with how they were going to do it, because, oh, well, you would have had to make a HSI and sell it into the buyback just to get your liquid, or you'd actually have to stake it. And in a newer protocol, it's not so easy to make that call. And the highest inflation side of it, it's probably better to continue to utilize the protocol to gain those assets, instead of going and risking them. But there needs to be liquidity to be able to derive a price anyway. The more liquidity that is there, the less you would have to be tied to hex or another asset to be able to derive a price through the other assets' price movements. So you can start to decorrelate and recorrelate more often, which is, it's fine, it's healthy. But also with Icosa, I mean, I don't really see too many issues. This also being, this is the sell side here. This is USDC. This is Icosa up for sale to be able to support price movement up. Kind of like Hedron, we have more support to the high end, to about $1.16, where price wants to be up in here. It wants to move this way. So it's pretty happy with this green candle support. But since there's not a whole lot of assets here, what do we got? This is only about, I'm going to show you what I'm looking at. It's only 3K per tick. That's not a lot. right? It looks like a lot because when you go look at these, right? Like that's 5K. How tall it is there. It's just manipulated by these, as opposed to these ones here, which looks about the same. Looks about the same as this, height wise. Oops. But in reality, this is 20K per tick. This is 3K per tick, this would be 5 times higher of a tick if this was Hex's USDC, way up here instead of looking way down there. So it is a little bit, it seems a little manipulated, but it's really not. It's just these. So there's a lot less because there is a lot less. There's not much Icosa that's out there, only a few million that's actually liquid. So this also, like I was saying with Hedron, it's nice to see healthy support on the high end, but either way, nice. Okay. Either way, as we move forward in time, obviously there's going to be more inflation that occurs. There's going to be a lot more availability for people to provide more assets, market makers per se, to allocate higher or lower prices depending on what wants to happen. Being connected to Hex also, and I believe that the majority of the correlation between the prices are actually connected through Hedron when it comes to the exotic pairs. Oh, it's changed. Okay, that's good. That's good to see. So the majority is actually here locked in the USDC. But as you can see that we're also connected to Hedron at about more than half of what this is. And this connected to Hex. So we're back correlated to Hex again with Icosa. So as you see movements happening with Icosa, it's gonna start looking more like this with Hex now that we're back correlated again with them. So that's good. But it also means that with Hex, since we know that we're pretty much stunted at this price right now because of the support, lacking of the high end support up here, that typically the support that's up here is going to be stunted as well, unless there's just what this could actually do is this could actually cause for people who are more interested in Icosa right now to be able to get involved into the protocol, for price to actually get pushed up here. And what that'll actually do is it'll drag this one up with it in Hex into these ranges here. If there's a lot more hype that starts happening in Icosa and it starts dragging these up, then these market makers that are back here, if they're paying attention, which they should be, they'll start to realize that they're going to have to be forced to support more higher prices with Hex if it's due cause because of Icosa moving up, because it does have higher support here. Same thing with Hedron as well. I guess I could go look and see where it's all correlated through Hedron as well. So we've got overall 4.1 million. The majority of it, 1.1 million, is connected to USDC. Look at all these pairs connected to Hedron. That's just insane. So we've got Hex and Hedron at almost $1 million correlation out of this 4 million. So it's almost split half and half between USDC volatility and Hex volatility. right here. Let's see, is there more? We got Hedron and Icosa correlating themselves together a little bit, very, very little bit, about a little over a tenth of correlation between them. And then ETH is also about a tenth. So we're still correlated slightly to the macro market, but then also very heavily correlated to our own ecosystem here, which is good. But then also have volatility for ourselves. So Hedron seems to be like the middleman in between, which is where it's supposed to be. It can push and pull Hex and Icosa around on its own behalf slightly. And it seems like right now that Icosa can push Hex around, not by much, because not by much at all, because as you can see, Hex has $14.3 million worth of locked assets, which is not all Hex. It's Hex and all the rest of this garbage that's connected to it, whatever all of its value is. Which Hex has a lot of stuff connected to it. I don't know how often you guys go through here and look at this, but it's kind of shocking to see. Obviously not going to affect it with 0.001. That means these are probably pools that were opened, but then depleted or removed everything from it. But there's quite a bit of erroneous. I'm looking at this here. It's there. This is fucked. This is completely fucked. Somebody put assets in USDT Hex at a range that they're probably, what they're trying to do here is manipulate the AMM bot for thinking that it was going to take the pool and supply them with assets, but I don't believe that that's how it works. I believe that the only pool that really matters when it comes to the AMM bot is the ETH pools. So they're wrong if that's what they were doing. So we are highly correlated to USDC, $5.4 million compared to ETH, which is the macro market connection, of about half. So if the macro markets move, it won't be as effective as just people buying and selling on USDC. In the 1% pair, in the 3% pair, as you can see, there's another 2.63 on ETH. So that pretty much correlates half and half between them. You got 5, 6, 7, not half and half. So that's 4.8 versus 7 million. So USDC is kind of more or less decorrelating itself from the macro markets, but not by much. So that's nice to see. So, I mean, 14. So if you had this much in USDC, that's 5, 6, 7, 8, 9, 10, 11. You got $11 million worth of these other assets, USDC and ETH, that are able to push Hex price around. Then I would say that even though there is support for Icosa, all you really have is about $600,000. So it's not really going to affect it much, even though per se it could. It could. Probably wouldn't move it too much, but it could. But as an individual, if we were completely decorrelated from everything else, then it would suggest that very easily we could go up to $1.30 pretty well supported. We could go back down to 45 cents a little above 40 cents in this support before it got locked right here. I'm trying to push it back up into these ranges again. So I don't know if this is like a walled garden type of attempt here, of somebody trying to get lucky to see if people will sell into it. They might be trying to do that, but for the most part, if you were to flatten all this out, it would be about an overall average of all this right here, which is, I don't know, it looks pretty good to me. I like it. But like I said before, that you know, it's about 3K per tick. So as you buy Icosa, then it's gonna, you know, if you're spending more than 5,000-6,000, it's gonna start pushing that price up pretty significantly, pretty quickly. We're gonna see big candles no matter which side of this you're on. If you're selling, you're gonna have big red candles going into it. If you're buying, you're gonna have big green candles pushing into it. This is a smaller players pool, and it's still a pretty big pool, 239,000. These people that are providing assets in here, they're not making much money, as you can see. If these people were to just go use the protocol and stake, they would probably make more money by staking than they are in fees between all these cats that are in here actually providing liquidity. So this is more of a benevolent people that are in here trying to do this, trying to just support the price, knowing that they're losing value because really, honestly, if they didn't give a shit and all they cared about was asset and that's it, and not about price, then there would literally be nothing here. There wouldn't even be a price. They should, with all of their assets, be in the protocol making more money off of just auctions that are happening. But they want to see a price. They want to have availability. It could be the SA. It could be a couple of the community members that are currently in here that know how these things work, that are, you know, just allowing for these things to happen, but not taking too much risk, right? Each one of these ticks here is about between, you know, $3,000 and $5,000 up to here, and this is less than $3,000 per tick here. So I mean, it's only less than 7,000 Icosa per tick, which is, this is what I'm looking at here. This would be a good pool, right? This would be like a, let's see here. Yeah, let's not do that. Let's see. I was going to get into it. Never mind. Anyway, I think it's probably per tick 7,000 Icosa going into staking that much is probably somewhere close to a dolphin position or some shit like this. Maybe I don't know. Maybe you guys know a little bit. I haven't looked at it yet today to go see. So, but that'd be quite significant if these people were to not provide all these assets above and just stake. Then they'd probably be making a pretty good chunk of Icosa per day. But instead, they decided to do this and get less than $1,500 in fees per day, and that's only within the people that are actually within the range. So like this guy over here that has all these assets there, he ain't getting any of this. He's exactly getting $0 per day until the price actually falls back into him. Then it actually he's within range. It's called in range. Right now he's out of range. If he removes this, it would be impermanent loss. It would be permanent loss. Right now he's in impermanent loss, unless they knew what they were doing and this is what they wanted. And then they just wanted to leave it there to be able to support that price, which is fine. That's healthy. Obviously, the people that are here don't care about these assets. They just want to use it for healthy market movements and availabilities for pricing. So it's good to see that we got people that are out there that are willing to do all that. Otherwise, we'd be 100% correlated to everything other than USDC and their movements on their own, which would probably be Hex and Hedron. Which it's good to see that when we looked at Hedron, that the majority of the correlation was to Hex. Here, the majority of the correlation is to Hex. And then when it comes to Hex, the majority of the correlation is between ETH and USDC, but mostly correlated to USDC. So it's good to see that we also have a majority of the correlation of ours to USDC, meaning that when these prices occur, they're going to look similar to each other, like we currently see. This downward movement and swoop up, downward movement and swoop up, upward movement and swoop up, because this is the underlying asset. Plus, it's got a hell of a lot of support, a fuck ton. These two should look relatively about the same. It's good to see. So that's about all I got right now. The numbers for profits, I don't think that the first quarter actually ends until March 15th to actually see the reports. So I don't know if that's going to actually affect what happens with the markets. So that could be, a good reason as to why you would see these assets stay there and stay below, and these assets stay there and stay below. They may be waiting for that first quarter of profit losses to see if it does affect the overall markets, even though you could just decorrelate from them. If you thought that it was going to be losses, then you could just completely decorrelate from Ethereum, and when all the markets dump, then you kind of stay there. But if you thought that there was going to actually be profits, then you could correlate to them by removing more USDC and adding to the ETH side. And then as the markets go up, you go up too, without actually having to have a whole lot of volume to pull your prices up. However, nobody knows, right? Nobody actually knows what's going to happen with those, whether there's going to be higher revenue for profits or lower revenue for losses through the first quarter. You can speculate, I guess. Some of you guys probably are more into looking at the macro market stuff than I am. I'll look through it maybe every once on an occasion, but not on the daily like some of you guys might do, to really keep your fingers on the pulse of what's going on in the rest of the markets. I don't really care, I guess, about all that stuff. But anybody have any questions or anything to say, or want to give their speculative outlook on maybe what the future looks like? Anyone really think that V3 is going to get launched today, like Hexala just said, or do you think that was just clickbait?
Well, thank you for the good alpha, and I appreciate all your time.
No problem. Not a problem. So yeah, I don't really see a whole lot of changes through what we saw about a month ago, the beginning of February, even though it seemed like it was at the very end of January, at the beginning of February, it seemed like all of the fear markets, right, whether to be in fear or not, went drastically away from the fear side and right into the bullish side. So we had a pretty good February, guys, like really bullish February. But I think that I don't know why exactly. Maybe one of you guys could clarify. But it seems like as we're going into March, maybe getting closer to March 15th for the end of the first quarter. I'm assuming that's when those reports come out. I would figure that they'd come out at the end of March, but for some reason they're already pushing it forward as far as what I saw. And they're speculating ahead of time as a bearish sentiment that's coming. Buckfut and some of those other financial advisor type guys might actually know more than I would as to the sentiment and the reasons why they're a month ahead or half a month ahead already speculating that it's going to be a bearish thing that's coming. Maybe they know something that the rest of us don't. But I mean, it really is kind of a buzzkill to, the entirety of February being pretty bullish, and, Richard coming out and, saying, these updates that had came out, and everybody, not everybody, but me seeing a lot of YouTubers talking about the bear market's over, and all these things that I would never, ever, ever say. I would not say it because it's far too speculative to be so bold as to make such an assumption that you know more than everybody else. It's really when I see people say those types of things and make those definitive type of speculative statements, I don't want to be rude, but I think that those people are very silly, borderline stupid, to make those types of calls and say those types of things. This is just too speculative. Like, am I really supposed to believe that you're the only person on the whole entire planet that can see the future? The only person on the whole entire planet that knows the future? And you're going to sit here in front of me and tell me that you know the future? Like, I don't buy it. I just don't buy it. So we get a lot of that goes on. A lot of people that say, yeah, I know absolutely that this is going to happen. Well, how? How exactly? Please explain to me how the fuck you know more than anybody else about these things when the markets are so vast, unless you're like the BlackRock, right? And now you're illegally giving trading advice because you're about to, insider trade, making some sort of merger with some type of company because you're about to take them over because you're just a fucking trillionaire. Like, that's the only person or people or group of people that, if I was so damn lucky to be in the boardroom, while they were illegally inside sharing information with each other, that this is what they were going to do, which I'm sure happens. But if I was so lucky to be in that room, then I would listen to them, knowing that there's a big chance that it's going to happen because they said it was going to happen, and they're pretty much the ones that manipulate the markets in the first place. But then there's also a slight chance that it may not, because shit happens and things change almost instantaneously throughout the day, right? Until the markets close in the evening. And then that's when they're going to get ready for the next day, which, I mean, yeah, it's really tough. I mean, I know that everybody wants hopium and everyone wants copium, but you got to be really careful out there. Just hedge your bets, be smart. Don't listen to anybody. Like, I know that there's supposed experts out there, but even the experts are constantly, they're just like meteorologists, just like the weatherman. They're wrong all the time. Like, the best analysis, technical types of analysis that I would like to see are ones that take actual TA, like showing you a TA chart with lines that like go from suspected fractals and other things, but then actually allocate like where the assets really are, like what I just showed you, with where the assets are and where the backing of the dollars are actually at, and then melds them all together. I think Access Alive is one of the guys that has a group of people that are with him, that probably does a pretty good job of those types of things.
I agree. I was gonna bring up his name, and he took the words right out of my mouth. Yeah, I think he's top tier.
Mm-hmm. Yeah, and I'm glad that I was able to develop the chart for the price versus liquidity and have him kind of grab onto it, really, and like take it to a developer and show the developer how to do it. So I think that there's actually a for Hex USDC that they actually took that and developed it so you can go into TradingView and actually look at it, which is really, really neat, right? I think that's cool. It kind of gives.
I think the indicator name is EMIBAP.
Yeah, that's right. EMIBAP. That's right. Yeah, those guys do a pretty good job. And I mean, I gave Silver the Antidote a little bit of a hard time the other day because he was making some comments on Twitter that I was like, dude, like, why we got to 7 cents and there's no more support above it, and you're like telling people that they're about to miss out if they don't go buy, and it's like you're putting them in the highest volatile position to start buying now. You're putting them in the highest volatile position for slippage right now. Like, I know that if you went out and were like, everybody should just slow down right now and just hedge their bets and not go do a lot of drastic things right now, that seems bearish, and that he shouldn't say that, obviously. But to go out and start telling people to buy into the highest volatility points it's best to just not say anything at all, in my opinion. Maybe throw some data out there and have some charts and stuff, but don't give too much commentary on it. Just be like, take this for whatever it is that you think that it is, right? And then that way it doesn't have to sound so bearish. But even I like him. I like Silver, and I like Access Alive. And then like Crypto Sloth, I haven't had a whole lot of chance to get too involved in with what he's got going on with that group of theirs, but I like that kid too. Just because I've always liked him before. He hasn't done anything to make me think any different. And then Miguel, I don't know if you guys have you guys see him every once in a while come in and shill his show for dollar cost crypto. But he seems to be picking up a lot more activity with shilling Hex to all his followers, which he's got about 16,000, but he's connected to other people that's got million follower counts. People who are big time influencers in the financial markets and the male masculinity market, right? I forget the name of the guys that Richard went on their show, but they pretty much like talk about how ridiculous women these days are, speculating on how things really are when it's really not that way. But anyway, they got a few million followers, and that's nice to see that we got some big time players that have access to those types of things. So it's really nice to get more activity. And I see that he's been doing some more AMAs, and on a recent AMA, people were actually asking more about Icosa. So I think that it would be nice to get him in here to maybe have him ask some questions to the community and have the community kind of send him in directions for places that he can go look at stuff if he was so interested in it. I know right now he's probably not. He's more interested in just shilling Hex because he's particularly good at it. Another thing that I'm liking as far as like the community sentiment is that there's less infighting seemingly happening, or maybe I'm just not noticing as much infighting, but everyone seems to be having more of a kumbaya type of sentiment, which is good to see that everyone's getting along. It's not always the best to be having a community full of negative people that are at each other's throats about stuff, but hell, even recently I have gotten some negative comments through Twitter, and I'm barely ever on Twitter, ever. And I got a couple of guys that were, because these things are recorded to YouTube, I guess maybe they went to YouTube, listened to a couple of the things that we were all talking about, and decided that they wanted to make commentary just about some shit that they had no idea what they were talking about. So I asked for them to provide some sort of acknowledgement to what they were saying, give some examples, show something where what you're saying is absolutely true. And that seemed to be all it took to get them to shut up. They had nothing after that. So that was kind of nice. Just shut those guys down. But other than that, really, I'm not seeing much negativity happening so far. Seems like KDP and HexVid have calmed down. People aren't going after them so much. I saw Sammy and the two sisters were going at each other's throats last week or week and a half ago.
That was so ridiculous.
Had nothing to do with Hex. I mean, that was just all personal stuff, and really, they probably all could have handled it a lot better, other than throwing their DMs around all over the place about all that type of stuff, and then trying to bring in more of us influential people into their little shit throwing contests that they were having. But you know, I guess you can't always make the best decisions when you're emotionally driven about stuff.
I just looked at it as pure entertainment. And then at one point I'm like, I wonder if they did this on purpose and they're working together just for views.
That's always a wonder, huh? About any of it all the time. Like the whole Jack Levin and Richard Hart thing, right? Them having like a little tiff between each other. Was it just to stir up more talk about it, because people talk about more negative shit than they talk about positive stuff, especially in a bear market or the ass end of a bear market? So it could have been. I doubt it, because Richard is pretty well, I mean, he pretty much says what he means what he says. You know, if he's shitting on you, that's probably not a good thing.
Related to that is his comment, the world is not run by greed but envy.
Yeah, that's a good point. I mean, I think that the auto sales are kind of falling victim to greed lately. I saw a report through Ford Motor Company that they had been selling their trucks for higher than MSRP costs for the last couple of years, and because of it, they are dying. And in that report, they were saying it was all because of greed. You know, it no longer does the sentiment of greed is good really appropriate good behavior through the long run, and now people aren't buying them.
I've noticed some pretty deep discounts on lightly used vehicles recently.
Yeah, used vehicles, it went a little overboard there for the last year, and hell, you were almost able to sell those cars if you bought a used vehicle 2 years ago and sold it a year ago, you were probably in profit by a few $1,000s. But now, if you try to sell a used vehicle, you are definitely at a loss, like a huge loss. If you bought it last year, unfortunately, and you're trying to sell it now, you are at a very huge loss, and it seems to be getting worse. And the housing market seems to be going through the same thing, or it's a sentiment would suggest that it's about to fall apart.
You know what it proves that it's all Ponzi, right? Everything's a Ponzi, like RH says.
Yeah, we need to start throwing around the hashtag Richard Hart was right again, which seems like that's probably going to be something that happens a lot through the last 3 years of him being on YouTube and making his comments on how the economy works and how it really is and how banking really works and how it really is, and why almost 99.9% of the influencers that are out there are just blowing smoke up everybody's asses, and how all the exchanges are definitely blowing smoke up everybody's asses, and the reasons why. I mean, not only did he say these things, but he gave really valid arguments as to like why and how and what they're doing and what their intent is. And I mean, he didn't really like censor himself too much. He pretty much stuck it right to him, and everything that he said about him ended up being very, very true. Which is kind of interesting. So you know how I was saying before about, market makers, they're not gonna throw all their eggs in one basket, just to be able to mitigate any risk that they may fall into on their own behalf. So if they do provide liquidity, it's not everything they have. If they're going to go stake, it's not everything they have. If they're going to buy or sell, I mean, they're not doing it all in one big old fell swoop with everything they have. They're using fractions of what they have to do all of it, to do everything. And I know that smaller players got to make wiser choices. They can only do maybe one or two of the four, deployable options that you have. But over a certain period of time, if you do things correctly and you have a good mentality and you have a good plan and you just kind of stick to your own agenda and don't be manipulated by other people's agenda, then those other options will open up for you a lot easier, right? You may be able to do what these bigger players are doing. And if there were only 4 options, then you don't have to deploy all of your assets across all 4 different options. You can just deploy a fraction of some of your assets into all 4 options and still create passive income, right? Which passive income is not normal income. Passive income is non-taxable, which a lot of people are not aware of. This is generally how millionaires and billionaires, without going through all of the trust funds, trust accounts, and all the other, lawyers and accountants and the rest of the bullshit that seem very, very complicated to get into with your investment portfolios, they just roll them into things that create passive income. Passive income, which is non-taxable. However, you can try to figure out how to appropriate that type of passive income, something that would actually be allocated as passive income and not actual income. Like doing liquidity providing is income. It's not passive, right? Every day you should have a tax report on it. Now, whether you actually file it or not is up to you, right? How are they ever in DeFi? How are they ever going to know unless you report it, right? If you're never ever going back out to your centralized exchange or your medium of exchange to go to your bank account, then how the hell would they ever know that you even existed with that income in the first place? Now, this is not financial advice or tax advice. As a matter of fact, don't listen to me when it comes to those types of things, because that was really bad advice, honestly. But in reality, how the hell are they ever going to know? They absolutely wouldn't. Now, granted, there probably are programs that governments have to be able to track all of those things, or not even governments. I mean, there's a website called Breadcrumbs that it does a pretty good breadcrumbs.app that you can go put in an address on Ethereum, Bitcoin, Polygon, or Ronin networks and be able to find the other addresses that are connected to it. Whether it goes through a mixer or not, it can do a good job of at least trying to put you in a position to be able to find out where it goes. Now, it's not going to, if you were to put it through Tornado Cash, it's done. Like, it ends there. So now we don't even have Tornado Cash. So that's kind of a moot point to even get into. But yeah, breadcrumbs.app is a pretty good one that I've had some people show me some stuff on it, where even when you go through that stuff, like you still don't know who those people are. It's just a number. It's just a wallet address. So, I mean, unless you were to be very, very speculative and be like, yes, I know it's this person's wallet address, then let's say like how people speculate that the OA, the origin address, is Richard Hart, right? So if you were to go put in the origin address into that and then allocate it as Richard Hart, then I guess that's the realm in which you decide to have your mentality stuck to. But then you would be able to take that origin address and see that it's connected to like over 100,000 different addresses. And then you'd be able to see where all those addresses go. You'd be able to see like what assets are deployed through each one, and then be able to choose other addresses, because you can see like how many other addresses are connected to certain other addresses, and then pull that address and put it into breadcrumbs, and then see where all of those addresses get deployed out to and what assets are connected to those. So you can really dive deep into the weeds with that, and kind of see what support is there. Like one thing that I like to see is not to say that I'm going to go ahead and go backwards here and say that I am in no way saying that the origin address is Richard Hart. Not at all. Okay. Now that I've made that disclaimer statement, it is interesting to go put in the origin address into like a breadcrumbs type thing. And actually, I mean, you could spend literally hundreds and hundreds and hundreds of hours going through all the connected wallet addresses and then refolding those back into the breadcrumb things to go see what other addresses are connected to those addresses. And then you can know one thing for sure is they're already in the ecosystem of Richard Hart's assets, right? And then I guess now Alex's assets too, because all those in some sort of way, all of those addresses are intermingled and connected, just like my address and the rest of your guys' addresses are now also intermingled with those as well. But as long as you start with the originating source, which would have been the OA address, you're able to go see through all of the other addresses that are intermingled and together, and then be able to see everyone's liquid availability of USDC, liquid availability of Ethereum. And some of those addresses, which is amazing to see because it's kind of bullish. It's almost like stupid bullish to see that the rise of Hex, that when it went from about like 1.5 cents, 3 cents, all the way up to 52 cents, that just a couple of those addresses, one or two, actually manipulated the whole price all the way up to 52 cents. And then they only utilized maybe about 30,000 ETH to do such a thing. And those particular wallets that have other addresses connected to them have over 1 million ETH still sitting in them. Still. 1 million ETH. Fuck the price of it. Just 1 million ETH. What the fuck is that? What is the price of ETH right now? 1,600? Let me go look. $1,655.
0.65 billion.
Yeah. Yeah, $1.65 billion worth of, these guys did it before, and they could do it again if they wanted to. And that's more than the sacrifice for Pulse Chain, and more than the sacrifice for PulseX. So to say that okay, you got $1.65 billion worth of ETH sitting there just for the Ethereum network, just for that one network, and then you've got what, another $2 billion worth of assets, maybe a little more than let's say around $750 million worth of stables that are sitting there. Like, could you guys just imagine that what they did with Hex with only 30,000 ETH, what the fuck they could do to the entire ecosystem with 30 times the amount of movement from there? And all they would do that whole entire time is increasing the value of all those assets. All the assets that they just bought, if it went from 7 cents today to $1, then all those assets that they just bought are very expensive. Like, it takes their $1.6 billion and makes multiple billions of dollars more, which would now be added sell pressure. Potentially, unless you were to need those assets to be able to provide higher prices for the rest of the community. Let's say we only got less than 500,000 people, and then now all of a sudden we got 2 or 3 or 10 million people. Well, you're going to have those assets for people to be able to buy to cause for price appreciation to happen in the first place. So what if now you don't just have the Ethereum network, but now you have Pulse Chain network, and you're going to need a massive amount of these assets moved across bridges to be able to appropriate a price to be derived across both networks. This would be a good way to do that. You don't have to worry about sell pressure, because then it could just be utilized to be able to derive prices in the very first place, which of course they'll be selling and buying across averages. But still, nonetheless, the higher the price goes, the more people are looking at it. The more people are going to get involved. They're going to tell everybody all about it. Now there's more people. That's when you go from 500,000 to 1 million to 2 million to 10 million people. And it's not even viral. People are just now starting to get away from the Hex is a scam thing to Hex is a real deal. Hex might be something that's worthwhile taking a look at. Pre-viral, pre-pulse chain, pre-everything else. Probably one of the better opportunities that you've had when everybody's like, oh, Hex used to be a penny or less, and now I missed out because it's 5 cents, 6 cents. Plenty of people that I see like, oh, I don't want to buy Hex at 5 cents. Believe me, we already did this once. Back before it went up, before Pulse Chain sacrifice even happened, before it went up to 12 cents, before it went up to 18 cents. When it went up to 12 cents and 18 cents, everybody was like, fuck, I wish I was buying at 5 cents. When they were like, I don't want to. I wanted to go back down to 3. You always have this psychological, emotional fuckery that happens in your own head that makes you want to not do it. But it'll all happen again, in my assumption, in my own speculative mind of already seeing it happen before, that it would be very easy for that to happen again. I mean, I'm pretty sure that some people that when they saw it was at 3 cents for almost most of the year last year if they were waiting for 1 cent and had limit orders just waiting for all that stuff, that watching it go up to 7 cents, they're wanting to throw themselves out of a window somewhere. Hopefully not literally. Absolutely, hopefully not literally. But you guys get my drift on that. And it could all happen again. What if God Whale comes in and decides, just like all the liquidity that I was just showing you and where prices could actually be derived and supported just now, which is pretty much where we're at. All it would take is a guy like God Whale or somebody else, some other erroneous address that has a fuck ton of X that nobody really pays attention to because it doesn't move around so much, decides to go add a bunch of liquidity in there and to start buying across their own pair, across all their own liquidity. They could easily spike it from 7 cents to 14 cents and double the price. Overnight, they could do that. Granted that that's probably not what would happen. It would probably take a couple of days, but still, within those couple of days, you're going to be sitting there wondering, when is there a pullback? When is there a pullback? When's Executioner going to tell me when there's a pullback? Right? And you guys, I mean, unless some of you guys go and do some of this liquidity analysis on your own, then you're probably going to need me to come in there and be like, there is not going to be a pullback. I see plenty of support for these prices that are currently happening. And then by the time that I tell you that, it'll already be practically too late. Generally, I start speaking about those things when it is too late. When we're already ready for a pullback to start happening is when I will tell people, only in the Icosa chat. I don't go into Hex chat and say these things, but only in the Icosa chat would I make a suggestion that if you guys keep buying, you're going to hurt yourself. Because there's about to be a pullback that's about to happen. And then boom, like magic, not even 10, 15 minutes later, there's a pullback. And then you start moving sideways from there. because I don't have alerts on that tell me when people go add liquidity. If I go notice that liquidity's changed, it's all happenstance. It's all just by chance that I just happen to be perusing. I'm on my computer at that moment. I usually leave up the old liquidity pools that were there and where they're spread across. And then when I reload the page is when I go, oh shit, it's moved. And I notice it, unless I took a screenshot of it or something and I already have the old screenshot there, which sometimes I may do, especially if it's been a week or two. I'll take a screenshot of it and then I'll just compare the two together to see exactly how it moved and where it moved, to see where sentiment is moving. Right? If I notice that there's more support on the underside and going, well, it looks like it's a seller's market right now. And then I notice a week later that all those assets have been removed and then placed above the price, and now it's a buyer's market, then that's good sentiment. That means price is probably going to appreciate to the high end, more than likely. To know that 100% for sure, I could never tell you that. Never, ever, ever would I say, absolutely, price is going to go from here to here, right? But after you see a bunch of volatility happen where the assets are currently at to derive the price, and then there's nothing up above that price, it's a pretty easy call to say there's going to be a pullback and the price is going to stop moving upwards from there. Like I've done probably 3 or 4 different times in the last month or two, which makes it seem like I'm some sort of guru or some shit. But as I'm showing you guys what I'm looking at, then you guys could do this too and make those same calls and see the same thing that I'm seeing, which is pretty much 100% guaranteed that you take that magic crystal ball and you're not really looking at the future. You're just looking at the data that's there and seeing that this is what it is. I'm not looking into the future. I can't do that, right? All I could see is that there's a potential for this or that to happen. And the potential for one thing is based on whether there's assets that are there on the high end. And the potential for other is whether there's assets there on the low end. And if there are no assets any further on the high end, and we've already moved price through all the assets that were there on the high end, then there's no availability for you to buy anymore, obviously. So if the price keeps going up, it's going to wick right back down to where the assets are currently sitting. And the same thing happens on the low end too. If people are selling and selling and selling, and now there's no more assets of USDC for people to actually get through the router at all, then you're done. Everybody's done. The whole fucking community is now done, because all the assets that were there are now gone because prices moved through it. And now it's turned all those assets that used to be USDC into the asset, or it's turning all the assets into USDC. And then now that's just the way that it is, like, period. There's no changing it until price moves again. So it's pretty easy to see those things. But until, like, if there is no, like, this is one thing, like, you see people say, oh yeah, everyone get ready because Hex is about to go to 20 cents. And I go look at the liquidity and I see no assets at all on Hex from 7 cents to 5, like it goes from 5 cents to 7 cents and that's it. And there's not really anything else, not even past 8 cents, 9 cents, 10 cents. There's very, very little. So yeah, it could, but it's not going to be supported. But then there's literally nothing. There's empty space from 10 cents to 20 cents. And I'm looking at this tweet that says Hex is about to go to 20 cents. And I'm like, just shaking my head. Like, what is it that makes you think that you need to say something so damaging? And you're so confident too, on top of it, that you're just so full of shit on saying those things, that even the market itself, by looking at the assets themselves, would suggest that there's no possible way at all for price to go there right now. And until people go add assets at that price, I'm going to keep saying the same thing. You're full of shit. You don't know what you're talking about. But the day that I see that liquidity is now at 20 cents, period, whether it goes from our current price at 7 cents all the way up to 20 cents and stops. And then that's what I saw when someone says, get ready for Hex to go to 20 cents. And then I saw that there was plenty of assets for people to buy all the way to 20 cents. I would be like, that is a good call, bro. That is a great call. And I'd be like, thank you for having me go look at the liquidity to go see what's going on here, because now I know that the market's about to move. And that would have been a perfect call. Well, I never see that. Almost every single person, almost every single one of them that goes out there and is like, Hex is about to go to this price or that price or whatever, wherever the fuck it's going to go. And I go look at it and I'm like, shut the fuck up. I don't want to sound so like an asshole about it, but you really need to shut the fuck up because you don't know what you're talking about. And the things that you're saying are going to get people hurt. And then they're going to go in there and they're going to do exactly what you said and go by. And then price is going to fall back down to where liquidity actually suggested it's supported, which is less than the value at which they purchased. And now they're going to be mad at the asset for some weird fucking reason instead of you. And they're going to tout that you know what you're fucking talking about, which you don't. So please stop. Like, learn what you're doing before going out into social media and saying all these asinine things without actually having the data that would suggest that it's even possible to do in the very first place. Because it's harmful, in my opinion, to get into that and make such things.
I think it's clout chasing.
For sure. Yeah. I mean, clout chasing to a degree that's going to really literally hurt people. And that's not good.
Appreciate your rants, Executioner. It needs to be said and it needs to be emphasized, which you do. So thank you.
I don't even think that I'm being too much about it either, honestly. Normally I don't curse and get all, I mean, I sound like I'm upset about it, which, I mean, at the time when I see those things, I am upset. There's a lot that it takes a lot for me to not tweet back in some sort of way or respond even in our chats in a certain way, which is almost easier to do because I'm not limited to how many words I can put in. But to not just look like the fucking resident asshole that goes in there. And then I literally have to teach everybody the reasons why I feel the way that I do. Like, what do you mean Hex can't go to 20 cents? It sounds so bearish. It sounds bad, as a matter of fact, having somebody like me that's been in this ecosystem for so long saying something like that, and then also having to explain to people, be like, no. What I mean is it can't go there now. As soon as we see that this can, assets are provided, liquidity is provided, then is the time in which I will say, yes, it can. But for right now, no, it cannot. And that sounds very bearish. It's almost like saying that Hex will never go back to 20 cents, which is not true. Just not right now. As a matter of fact, like what I was showing you guys, it actually suggests that with the liquidity that's there on the 0.3% pair, that Hex could actually go all the way up to 24 cents right now. It wouldn't be supported at all, but the amount of liquidity that's there, I mean, there's 29,000 Hex sitting in a tick at 24.2 cents. There's another 28,000 Hex sitting at 24.06 cents. There's another 28,000 Hex sitting at 23.78. So, I mean, if you wanted to buy 23,000 Hex, which, I mean, that's like what? $1,500 or something. Yeah, if you wanted to go spend like $1,500, right? Then the support that liquidity would support it, right? That's fine. But then everybody would be limited to spending, $1,500 to $1,600 without moving the price up against themselves to a point where now you're just going to get less anyway, because now you've pushed it from 20 cents to 21 or 20 and a half to 21 and 21 to 21 and a half. I mean, and you're still going to be getting less for your dollar value anyway by pushing the price up. And nobody really wants that. That's huge amounts of slippage, even for only spending, $1,500. I mean, people would rather be having $23,000 worth of asset per tick that you could go spend $20,000, which is like 200,000 Hex, right? More than that, 300,000 Hex, let's say. Yeah, it's about 300,000 Hex to buy $22,000. That sounds healthy, right? Like, most people aren't DCAing, spending $20,000 and then going, God, I wish I could make another purchase, right? Not very many people are taking $1 million and trying to split it up through $20,000 increments just to be able to not move the price up against it. But it's still going to happen anyway.
Oh, you're coming over. Wizard.
Mr. Crypto, your mic's on, bro.
I'll just mute him and then allow him to speak again.
Question
Sounded like
regarding liquidity providing and whose liquidity gets sold. Like, for instance, it would make sense in my mind that whoever placed liquidity at a certain spot, it got sold through their liquidity first. Is that how it works?
Yeah, like wherever price is at is where liquidity is going to be being used at. So if you're not even anywhere near price and you provide liquidity at a, I don't know, between 9 and 10 cents, then you're not in range. So you're not being used. As soon as price goes to 9, 10 cents, then now your liquidity is now being used as soon as price gets to there.
I guess my question is, sorry, I wasn't real clear. Is your liquidity going to be used first before someone that placed liquidity after you at the same range, the same tick?
Oh, no, everybody's, it's split amongst everybody across the whole entire tick.
Do you think that it could work that way though, the way I said? Do you think there's a possibility in the future that whoever places liquidity at a certain range first is their liquidity gets used first?
No. Nope. Everybody's liquidity within that one tick gets used, and the fees are split amongst that one tick depending on your percentage of that tick. So if you and I are the only liquidity providers at 7 cents, at exactly 7 cents on that particular tick, and there's only, let's say, $30,000 that, let's say $100,000 that's there, right? And I'm $70,000 of it, you're $30,000, then both of our liquidities will be used as that one tick is moved through, and you will get 30% of the fees, and I'll get 70% of the fees.
I understand that part. So what happens if all the liquidity doesn't get used? Say just half of it.
Then 30%?
Also, okay, same percentage. All right.
Yep. That's exactly right. And it just wouldn't move the price through the tick all the way. It would be actually best case scenario for both of us that they didn't use the whole entire tick's worth of value. Yeah.
Understood. I sent a DM to you, Executioner, just a couple things that I don't necessarily want to bring up in chat, but I figured you'd be interested in looking at, and I'd love to hear your opinion on them.
Okay. Oh, I guess I should be paying more attention. I got quite a few DMs. All right, Guillermo, I'll have to get back to that. Actually, is Guillermo in this chat? Is he in here? Is he in here? No. Okay. Somebody wanting me to fix the UI. He's talking to the wrong person. I'm not doing that. Okay. Yeah, St. Kitts, Nevis. I think that a good person to talk about those types of things would probably be Nomad Shanty.
We've already spoken a little bit about it. Yeah, it's very fascinating to me. I'm like piqued interest on that for sure. I'm gonna look into it deeply and figure out all there is to know.
Yeah, I think the cool thing about it is, like, if you're in the UK, there's a couple of islands that are closer to you there, that because you may have to like actually travel to those places when you're opening up an account, which is hopefully it's in a good temperate location, so it's like having a vacation, which is not a bad thing.
You don't have to with St. Kitts and Nevis. You don't have to.
Oh, really? That's nice. Yep. That's nice to know. But I probably still would, just because it's nice.
part of the investment that they require, you can for a little bit more actually invest in real estate, and after 5 years sell that real estate. So you get return on your investment after a certain number of years. And yeah, so far everything I've read about it is like, wow, this is next level. And I guess what the Bitcoin Cash guy, he lives there. He's a lot of OG crypto guys are, maybe not living there, but at least, hold passport and have citizenship there.
Give me 1 second.
Siggy, have you been there before, Siggy? If you're near your mic. What did you think of the island? See the influx, like, was it easily observable, the influx of money from people that get dual citizenship there? Like, is it reflected in the quality of the buildings and the infrastructure, et cetera? Seem like a first world country. All right, I'm done questioning you. Thank you very much, Siggy.
Yeah, it's generally the investment that you have to make to be able to qualify for being able to do those types of things in those particular countries. $125,000 or $150,000 is pretty cheap. I think in like Portugal, which I'm not really sure how advantageous that it would be for Portugal, but either way, that I believe that you have to have you have to purchase like real estate to the tune of about $500,000 to be able to get moved into those types of account investings.
Yeah, so if you do the numbers, like $150,000, okay, just triple that, and that's what you would have to have in crypto to make it worth it. Say you have $450,000, but hey, you can cash out there, you create citizenship, and that's equal to the amount of taxes that you would pay if you were in the US. But then you have like diplomatic immunity in regards to having the citizenship and having that protection of, if shit really hits the fan in the US, you you have some more protection.
Wouldn't you also have to renounce your U.S. citizenship to avoid taxation?
That's a good question. I don't think so though, but appreciate you asking it.
I have another question. What country were y'all referring to? I know I've talked to Famous and the Hex Twitter Spaces quite extensively about Portugal, and Executioner's right. It's a good $400,000 to $500,000 property that you have to own. But what was this country you guys were talking about for $150,000?
$150,000. That would be like
posted.
Okay, that would be like St. Kitts or Nevis.
Okay, excellent. Thank you.
Mm-hmm. And a beautiful place to go visit too, especially if you have to go hit up a bank somewhere.
think maybe if you were to first take profits as a US citizen and off board, off ramp into US dollars and then move it there, then yeah, I think you're implied with taxes. But say if you have a private wallet and you've done your due diligence with privacy, then I don't think that you would have to pay. But I'm not for sure on that. That's not financial advice.
I saw another provision where you might be able to say it was like income earned outside of the country or something. So U.S. taxes as well, but I wasn't sure.
Sorry, guys. I know you guys hear me click-clacking away. I think that these types of conversations about finding external sources to have your investment banking through, opening up trust accounts and things like that, are probably going to continue to keep happening in a positive outlook. I think that obviously the more that we're educated and the more information that we have as individuals, and the more willing that we are to educate newer people, which is going to always be a thing, then the better it'll be for our ecosystem, our communities. That's why I like to stick to my little sector of probably the more important part of it, where liquidity is, where the assets are, how it derives a price. Because that's, as Richard says, that's all anybody really actually cares about is price. That's it. So I like to really reduce my intake of information to just that for my explanations on my outputs for data to give to you guys. And I'm finding as I continue to keep doing these things that it's a lot easier to explain these things. That it isn't me sitting here for 4.5 hours of constantly going through it over and over again. And that's really bullish, in my opinion, for the education side, because that means that a lot of you guys have been involved in my live stream voice chats since the beginning, right? When they weren't exactly me sharing my screen, it was more me just kind of explaining how liquidity works and why people would use it and where people may go and why they did what they did. But now that I've got a shared screen that I use to actually show you guys what I'm saying when I say it, that I'm without having you guys acknowledge it and tell me that you're getting it, I know that you are, because at the beginning I would have 7 hours worth of questioning on why I said what I said, in conjunction with where things could go and why they would go there. And now it's more like, yep, I get it. So that's really good to see that I know that you guys are getting it. You guys are picking up on it. There's not so much, it's more confident with you guys now that I'm noticing, as opposed to getting a lot of yes sir type answers where people are just like, yeah, I get it, when they really don't. So that's really good. So I think the more education that we have on the most important parts of it and price, then the less we actually have to focus on it, And eventually we probably, don't even have to talk about it anymore eventually, because the majority of you through time will have enough assets that you'll just start doing these things, right? Maybe every once in an occasion we'll have a conversation as to, maybe private conversation, which even I don't like private. I would rather remain public with the majority of what we're saying, but I get it. I understand that if you guys want like a private answer about something because it's something that you guys are trying to get into privately on your own behalf as an individual, then we may have a situation where you're DMing me and then we're just strictly leaving the data that we're going over in that particular chat. I get that. That's fine. I may not always be available, but at least I try to get back to you guys as much as I possibly can. And those that have sent me DMs asking me those types of particular questions know that how I handle those things. If we can give you better generalized understanding on how it works, or we give each other feedback on what we had already talked about. I noticed that even those types of DMs dwindle over a certain period of time. And a few of you, maybe 5 or 6 of you, that we initially started out with the quintessential, what do I do? What the fuck am I doing? And how do I do it? I just don't get it. I already added liquidity. Was this a mistake? And then coming to the general conversation of most of the time, not a mistake. Almost every single time, it's not a mistake. But with what you've done here, you need to understand what you're doing here. And as soon as you get accomplished with whatever it is that you wanted to have to get done, then you're generally happy, right? If you wanted to sell across an average and you put assets above the price and then it happens, then you know when to pull those assets and you're generally happy. If you wanted to buy and support price at a lower price and you end up buying cheaper than everybody else, then you're generally happy. If you only wanted fees and that's it, and you wanted to try to be one of those market makers, then you're gonna have to have a significant amount of assets to be like a percentage of the pool. And playing in the V3 side of it is dangerous. It is risky if that's what you're going to try to do, to garner fees on the V3 side. My suggestion almost every time, that if you want to be an actual long-term market maker, then you want to go look at the V2 pools and add liquidity there, or at least try to do a V3 position where it's almost practically a V2 position anyway, where your ranges are so vast, so wide, that even though it is considered concentrated because it's not at infinity and it's not at zero, absolute zero price, it's higher than absolute zero and just less than infinity. Because I mean, who really thinks that it's smart to provide Hex as an asset to sell on liquidity all the way up to $1 million right now? What is the likelihood that you're going to fall into an impermanent loss situation at $1 million? If that was the case, then we're all fucking stupid, silly, fucking happy, rich as fuck, like richer than anyone that you've ever met in your whole entire life. If that was the case, would liquidity suffice that you could even get that money? I don't know. I guess we'd have to look at that at the time, but that's kind of what you'd be doing in V2. So you'd have to have like a significant amount of assets to be a portion of the pool, and then be happy with the fees that you get, knowing that you're always in range. You're not really risking a permanent type of loss. Even though you may have to take some of the fees that you got and re-add it to your position to build your availability for garnering more fees at that time. A wise guy once told me, a wise, intelligent person once told me, which he's in the room right now, but I don't want to call him out, once told me that Uniswap is 1,400% more efficient on the V3 side than it is on the V2 side. So your availability of garnering fees, if you do it correctly, can be 1,400% more advantageous than the V2 side. But in the same light, he said this, which really rung true to me in it was almost comical, funny that he put it this way, because it was so true. was that in reality, instead of saying that V3 side of Uniswap is 1,400% more efficient than V2, was really to say that the V3 side was 1,400% more risky on incurring impermanent loss than it was on V2 side, which is absolutely true. That you are putting 1,400% more risk to your portfolio providing liquidity on V3 without a purpose. If your purpose was to garner fees, then you are taking a huge risk on V3 than you would be on V2 and just being patient. So that's why I say real market makers, real liquidity providers that want to garner fees, do it in V2 or in V3 in a way that, like I said, the ranges are practically spread in such a wide range that it's going to garner you fees pretty much how V2 would anyway. Which you could do, which is fine if that's how you wanted to play it, which you can see like when I'm showing you that there's very little amount of assets all the way up to 22 cents on Hex. It's because somebody's spreading their range really far from the current price all the way up to like 30 cents, 40 cents, somewhere where they don't think that it's possible right now for price to get to before they actually get done with what they want to get done and the fees that they want to garner, or if they want to sell at an average of what they had and that they were happy with doing at the time. So he's still okay. I was corrected. He says 400,000%, up to 4,000x, which is actually 400,000% more risky. He corrected me. So yeah, big difference between 1,400% more risky on V3 than it is in V2. It's 400,000% more risky to garner fees on V3 than it is in V2. So that's a big difference. It's very, very important to pay attention to these types of things, in my opinion, especially to those who are getting into Icosa and Hedron in an asset that it's new, right? I think Icosa's just barely 6 months. Hedron's just barely a year, even though it does go back to the beginning of Hex. So probably more pertinent to talk about Icosa. And those of you who are currently staking in the protocol, who's garnering the majority of these assets, that have more of a long-term viewpoint on how they want to handle these assets, these are probably really important things for you to be paying attention to, because liquidity providing might be something that you want to get involved in because Uniswap market sells and buys just isn't going to be sufficient for you, because you're just way too large of a player at that point in time. That now you're going to be more of a community market maker now than just a speculator. You're going to be a big player potentially. And some people who were started out as medium-sized players that were day one stakers in Icosa are already starting to see that they're now not a small medium player any longer. That they are already, and they haven't even served their first term to the minimum of the contract yet, and they've already got an ass load amount of assets, which is not going to suffice per tick right now. Like I told you, that even on the high side right now, per tick is somewhere between $3,000 and $5,000 per tick, right? So I mean, if you started with I think one of my wallets, almost every single wallet right now is double the amount that you started with, right? So if you started with 5,000 Icosa, then you're probably sitting in that pool, not even hitting your minimum yet, at maybe 6,000 Icosa of incurred yield that you had, doubling your pool. So that's massive for somebody that considered themselves a medium player in a brand new game. Now you're potentially a large player. If you had 100,000 Icosa and you're sitting at 200,000, then you're probably going to want to know some of these things to be able to get involved with more price support, which would be beneficial to you to be able to do. And you're already holding on the asset to support those higher prices. It doesn't take USDC to do it. USDC supports selling lower prices. Providing those assets is support to the higher price. When it comes to liquidity, that is how it works. When it comes to market buys and sells, obviously it's the exact opposite. You need USDC to be able to purchase into the assets that are currently being provided by those market makers, which would make the price go up. So it's a flip-flop of mentality on how you're going to be doing. If you're a buyer, then you would handle it a certain speculative way through market buys. If you're a seller, you could do the same thing, but is liquidity provided to be able to support whatever it is you're trying to buy or sell? Do you need to be the person that gets in there and does that? Some people can't because they don't have the asset, right? Like if you're a millionaire, or if you had $20 million and you want to come into a pool that only has $500,000 worth of locked assets into it, no matter where you wanted to go, and the only way for you to be able to get in is to, let's say that the next few ticks are only $5,000 worth of Icosa, right? And you didn't want to move the price up against yourself too much, then you're only going to be able to make $2,000 purchases. Now, having $20 million in your pocket don't mean dick to anybody. Nobody gives a shit at that point because you could only buy $2,000 at a time, which is going to cost you to be able to do that. And it's going to be way too much time for you to be able to get into that. And the only way that you could support that price is if you actually had assets. So that means that you're probably in some sort of way going to have to go make market buys to be able to go get, I don't know, $20,000 worth of Icosa. Let's just say that this is a speculative hypothetical, right? $20,000 worth of Icosa, which is going to get you about, I don't know, at this price, at this point, maybe what, 35,000 Icosa. Go stake that shit and get involved. Start with the protocol. So now your assets are working for you and you're garnering passive income in some sort of way off of that over a certain period of time. Or spread it across multiple wallets and listen to the community talk about how compounding works and start working on that per se. Pay attention to what average gas costs are so you can mitigate that as well. And then now you're sitting there with $19.7 million to figure out what the hell to do with, right? So now you're going to go maybe spend another $30,000. Go buy another 50,000 Icosa and then immediately go put it above the price on liquidity, right? And you're probably going to want to concentrate that liquidity pretty high, knowing that you're going to push the price through everything that you just bought, actually probably losing value because now you're turning it in that to USDC in the pool. But now you're able to buy a lot more across your own assets that you just put there. So the $30,000 that you just spent, you're going to have slippage. So if you got 50,000 Icosa, you probably could have got 60,000 Icosa. Let's just, like I said, this is just a hypothetical. I'm just throwing numbers around. So now that you put liquidity out there and you go spend another 30,000 instead of 50,000 Icosa, you're probably getting 55,000 because now you push the price up against yourself a little bit, but now you gained a lot more asset, 5,000 more asset just by providing extra liquidity, which could be a lot, right? And now you can remove some of that liquidity, not all of it, maybe 50% of it. Now you got a bunch of USDC back in your pocket again, and you're still sitting at $19.3 million. And now you increase that again to $19.5 million. You go spend another 20,000 again, or just purchase across the same pairs that you already had that you reduced to 50%, and then add on top of the price even further ahead of yourself, concentrating that again. Now you can go spend more than 30,000. Now you can spend 50,000 because now you're building a liquidity pool, right? Now what you're trying to do here is stair step and build the liquidity pool for you to buy across, not just so that you can gain more value, but now you can spend more of your liquid USDC assets or whatever you're going to be purchasing with to be able to spend more of them to get more on top of it. Now you can go add more liquidity because now you're able to buy more assets and actually be holding on to the assets to be able to do those types of things. And that's why like a guy like Godwale can go do that because he's got fuck tons of hex already. He doesn't need to go mess around with the rigmarole of trying to figure out how to garner these assets so he can go spend millions of dollars and provide his own liquidity. We have to do one of two things if you didn't already have all the asset. Figure out how to make some purchases somewhere to be able to get it and probably wreck yourself a little bit, knowing that eventually you're going to be able to make up for it. the little bit of wreckness that you took into it eventually, if you did it right. And then build that liquidity pool so that way you can buy across your own pairs, and then hope that the other people that are coming in move their liquidity to help support you too. So it's not all just you doing it, right? Because you could potentially be exposing yourself to being exit liquidity also. As the price moves up and it turns your assets into USDC on the pair, it's going to open up the availability for other people to start selling into it, which in Icosa is a hell of a lot less likely if you're adding big chunks of assets in there and the price moves through as you buy into it, because most people don't have a whole lot of assets in the first place. And the rest of them are all actually staking into the protocol. So they don't even have access to those assets anyway, unless they wanted to EES and just nuke themselves to be able to try to see an availability for them to sell out, which right now doesn't make a whole lot of sense to do to yourself because you're already early in the game. In the highest inflation rate, it just literally makes zero sense to start moving backwards in the process, unless for some reason you were fudded out or something happened that you needed it, or there's a couple of instances that I could think that you would do something that seems irrational, but understandable if the explanation was there as to the reasons why things were happening, right? You lost complete faith in all of cryptocurrency. You were emotional type of person, and fucking Jawa came in and warned you with a strike or some shit, and you're just, you didn't like that, so now you're just gonna nuke your whole everything you got. But I will say that, even though it is a hypothetical of somebody sitting there with $20 million and trying to figure out how to get into an asset, not wanting to do all of that extra work, there are people out there that know exactly how to do it and what to do, that do have that type of availability, and they're just generally just sitting on the sidelines, not wanting to do all that extra work and just waiting, just biding their time, knowing that the rest of the community that's currently involved into the protocols that are building all of their asset bases with those things are eventually probably going to have to start providing liquidity on their own behalf to be able to get in and out of the positions in which they're at. And at that point in time, when there is more support at those prices, then the bigger players will come in too, because then they don't have to take all the risk. They'll split the risk with the community that obviously is showing those big players that the community knows what they're doing when it comes to asset value and how to derive those values in a high side or a low side or anywhere. It's not really a negative thing. There is no negative side to it. It's either you, like I think I said in the chat the other day, it's either you like snow or you don't. But the fact that you don't like snow doesn't mean that the snow isn't going to fall, right? Or hot weather, right? Either way, your emotions are not going to affect it. So emotionally, good or bad, there's nothing there. There's no there. It's just, is it healthy as it progresses? Now, Icosa is a good one to pay attention to and learn these things with, because the asset started at zero, right? There were no assets. You had to pretty much use the buyback function to be able to have the protocol mint you up tokens to be able to get started in the very first place, to be able to get liquidity for people to buy, which immediately is going to start price discovery in the first place. So having it at a higher cost, like $2 and some odd cents, it made sense to me. And then watching it slowly dwindle down made a lot of sense to me, right? So you're going to have price up here, a lot of inflation that happens, price start to dwindle down as that inflation goes up. And then eventually that inflation starts to dwindle, gets less and less and less. And price appreciation is going to start going up and up and up as people start to actually utilize the tools that they have through liquidity providing and just the tools of market buys and sells. And also using the protocol to garner themselves more assets or to build themselves a higher position to try to avoid being diluted by having new people coming in, right? Having new hexagons coming in with all their hex, maybe buying Icosa across the pairs that are currently there, maybe making HSIs and getting liquid. Like sometimes that shit still happens and everyone's confused. Like, why would somebody use the buyback function? Like, it's not anywhere near the ceiling. You just don't understand. Some of these guys got so much asset that the value that you see on a price chart doesn't mean shit to them, because liquidity doesn't suffice for what they want to get moved around. It doesn't matter what the price chart says. What really matters is how much liquidity is available there per tick for price to move for you or against you at that time, on whether you're actually going to have a value as to whether you're really getting wrecked or not. So it doesn't matter. And these assets are connected to each other through liquidity. So you could go see that I've shown you guys what those liquidity pools were connected to USDC. But what I didn't show you is what those liquidity pools were connected to through HEX, right? I didn't show you where the volatile movements would happen at a certain price range when you're connecting Icosa and HEX together, or Hedron and HEX together, or HEX and, let's say, Ethereum, or Hedron and Ethereum, or Icosa and Ethereum, which for the most part, hexagons have only really kind of dealt with two different assets to purchase and sell HEX with, and that was Ethereum and USDC. So there's a lot of it, right? So to have them all interconnected and interweaved together between Icosa, Hedron, HEX, and Ethereum makes sense, right? So you, instead of doing what I just did by showing you guys just the USDC side, which is generally what is actually going to derive a price that makes sense to you guys without doing a whole lot of math. I took the lazy way, right? But if I really, really, really wanted to get intricate into it, then I could have went and shown you guys, which still wouldn't have made sense to you because it doesn't show you dollar value. It would show you how much of one you can get for another, for a whole value of one, right? One Ethereum can get you this much HEX. One Ethereum could give you this much Hedron or Icosa, or one Icosa could get you this much HEX, vice versa. Some of you guys already know all this stuff. Some of you guys are really intricate on learning those things because some of you guys are more interested in going from HEX to Icosa, HEX to Hedron, Hedron to HEX, Hedron to Icosa, Icosa to Hedron, Icosa to HEX, HEX to Icosa, vice versa, all of these things. And the liquidity pools, the router on how it utilizes those things doesn't really give a shit what you're trying to do. It may, if the majority of liquidity is through USDC, if you've got $5 million connected between HEX and USDC and another $5 million between Hedron and USDC, but then you see that there's only $6 million between HEX and Hedron, and you wanted to move from HEX to Hedron or Hedron back to HEX again, but the majority of the assets are connected to USDC, the router is still going to make those swaps through USDC and then from USDC to the other asset. It's not going to go directly from one to the other because the router says, I can just go transfer all this HEX directly into Hedron or directly from Hedron right into HEX. It needs to be able to suffice the difference between the two by moving all the assets into USDC, then from USDC back into another one. So it does multiple transfers from one to another. And it will do that if the asset to asset transfer is a significantly less than the available liquidity that's sitting there in USDC, the USDC pairs, which happens a lot. And I believe at the very beginning, even Alex was going through and telling people, and even the essay was going through and telling people through codes that were put into the transfers of the benevolence function, that if people wanted to have better price appreciation, then they should stop providing liquidity in USDC and connect these assets directly together. Because like, as you can see the price chart for HEX, how it went from 3 cents all the way to 7 and just kept going up like that until there was no more assets in HEX to be able to be purchased. And now we're going sideways. That same thing would happen if nobody was providing any USDC liquidity on Hedron and Icosa. If there was zero, and the only thing that you could do when you were transferring from one asset to another was to have it connected directly to HEX. And that was the only way that you could move in or out of those assets. The price charts would literally look exactly the same. But since that's not the case, and you have some correlation to HEX and to the other assets and some correlation to USDC, the charts don't exactly look the same because people aren't always buying and selling across the exact same pairs. They have all these multitudes of pairs that they can trade across. So the chart actually differentiates themselves and looks a little bit different. Like right now, HEX and Hedron, Hedron and Icosa are more correlated to each other than they are to HEX right now. So the price charts actually look different from each other. Hedron and Icosa look more similar to each other than they do to HEX. But if you were to actually have all three of them correlated, tied to each other, to just each other, and not to USDC, then all three of those price charts would look the same. And it's partially the same reason why in the macro environment, where everything is generally, most assets don't have an ecosystem of assets that are connected to each other where they can do what we do here. Most of the time when someone develops a cryptocurrency, they just connect it to Ethereum and USDC. They correlate and decorrelate from each other in that respect, but there is no other exotic asset to compare price charts together to know that it could have been different. It's just pretty much that if Ethereum tanks, your asset tanks too. If Ethereum goes crazy, your asset goes crazy too. And that's why we have a mixture of correlation in our ecosystem of assets that still connect you to Ethereum and also decorrelate you to USDC, and also have a mixture of correlations to each other in the assets that are in this ecosystem itself, right? So that way, if Ethereum dumps, all of the assets don't really respond the same way. You guys have probably seen this happen before, where the rest of the whole entire market dumps into the lava when HEX and Hedron, and now eventually when we have more assets between the community, Icosa will start responding the same way, where you're not exactly having to be connected to the macro Ethereum or Bitcoin, but be more or less correlated to USDC and the rest of your assets, that they're not going to be effectively moved by those macro markets, right? So it's nice. It's crazy how different this ecosystem's assets are compared to everything else. And it makes sense to me why when the rest of the market takes a dump, that these assets stay with their heads above water. And hopefully through the months, years, and everything else, as we watch how these assets play out, we watch how liquid amounts are versus staking amounts, how we watch how the share rate moves, and all this other stuff that really it's important. All these things are factors that are important on how the supply, the inflation supplies winds up in your hands, and how you can use those assets to be able to create healthy availability of liquidity or markets to have good price appreciation in the first place. And then also know this, guys, that it being connected to, yes, I am reading what you're saying, by the way, guy who is erroneous, who is currently DMing me, I am reading it. We are still correlated and connected to, whenever we decide to be, to those macro markets. So when the bull market hits and those assets start tearing ass back up to their all-time highs again, we are going to be affected too. So not just your own market buys are going to cause price appreciation, just the generalized movements of those markets all in it of themselves, even if there's no volume happening on any of our pairs of HEX, Hedron, or Icosa, or even the Maxi guys, because they're connecting all their shit, all their what do they call them? Whatever, all of their other assets that they have, no matter what they call them, are all going to be connected together, and we're all going to rise with the tide. So there's good things to come. I think that it's good to have a lot of support from you guys, and I think that over a certain period of time, we're gonna do great. We're gonna continue doing great like we always have been. So that's my rant, and I'm sticking to it. I think I'm running out of time here, so I'm probably gonna have to go. Is there any questions before I head out? Did I put you all to sleep? Cool.
Oh, that was great. Thank you very much for doing that again, Executioner.
No problem.
Big thanks, Executioner.
No problem.
Thanks
No
for the resurgence of the chat. Maximum pun intended.
All right. Okay. No questions.
Where's mine?
I actually got some information from him. He said that he's been busy. He's working on some things that he said large. He thinks that it's going to blow my mind away. I haven't had a chance to talk to him about it, but he said that he made a presentation, and maybe he'll send it to me and tell me more about what's going on. Which I don't know what the hell he's talking about. I have no idea, but it seems like he's been busy. So it's good to hear that he's been busy and he's not, dead in a ditch somewhere. So that's good.
Does it involve a native Indian tribe?
God, I fucking hope not. I don't know. I have no idea. I'd just rather stay away from that shit. I think that he's getting a lot of support. He's been away and people DM him and have been asking him how he's doing and all these things that he's getting those messages. I'm not sure if he's exactly responding to them, but I know that he's getting those messages. So that's good. It is slightly going to his head a little bit, which is fine because I think he deserves it. He does a good job. He knows, he seems to think that the chat is boring without him. I told him that there really hasn't been much of a chat because I've been away for like the last month handling my own stuff. But it's good to think that he thinks that the chat absolutely needs him. So that means that he will be back, right? Whether he's absolutely needed or not, I think that he brings a hell of a lot of entertainment value. And those yield parties are fun, right? Like you guys enjoy that stuff. I'm sure you guys like to continue to do those types of things. So hopefully he gets done and gets accomplished with whatever that he's getting done with, and he gets his ass back to the yield parties and continues those things. So those were fun.
Missing him.
Yeah. I don't get to participate in the yield parties because in the evenings I'm particularly busy. So I'm glad that he took the lead on that. It's pretty funny too. He still calls me dad. So I don't know why I'm not his father. I don't have children. So, but he started off the conversation with, "Hello, father. This is your brain damaged son returning to the Icosa Chat." So at least he's in good spirits. So that's good. Anyway, if there are no questions, then that's good. That means I did my job well. And I'm going to unfortunately have to head out of here. So if there's any updates on anything, I'll let you guys know. If I see anything big happening, like what we recently had happen, which is kind of the reason why I actually did this, is because we just had a double in price recently. I kind of did my last one previous to the moves, kind of gave my speculation on how things could happen. Said that if more assets were provided higher, then price could go up to around where we currently are. I'm glad that we got to do that and got to see that this is how things actually work. I mean, I could have been, it could have went the other way, but I'm glad that it didn't. And then, if price starts to retrace any, which I don't really see it happening too much. And like I said, it could get down to 3.5 cents because it's available to do that. Do I think that it's going to go back to 3.5 cents? No, I don't. That's just my own speculation. Could it? Yes. Do I think it will? Probably not. Do I think that we could fall back through 6 cents? Yeah. But I think that right now is probably not really going to happen. Like people are super excited So probably not going to happen. So we'll just have to let time roll by, another 24 hours, another 24 hours, and another 24 hours worth of volume. And then maybe in another week or two, I'll do it again. I'm thinking that the quarter ends March 15th, that you'll have earning reports coming out on March 15th. That might be the next big leg down or leg up that happens in the macro markets, and might warrant for me to go take a look at liquidity and see whether it'd be pertinent to kind of go over those types of things again. And I have yet to have a moment where I we had a big leg up or a big leg down that would be like the educational lesson where I tell you guys, even though we've got volume, even though we've got people buying and selling in our own community, that these macro movements between Ethereum and Bitcoin are going to cause price appreciation. Like, maybe some of you guys have already seen it before and you guys know exactly what I'm talking about. For the new guys that are in here that don't really know what I'm talking about and like have not yet had the availability to see those types of things, that even if we're not buying or selling anything, that our prices can go through the roof just because it's connected to those other assets. It would be nice to be able to pull that out and kind of give that, this is the reasons why, this is what's going on here, like types of things to show that. And I will, if that does happen. Hopefully the 15th is more of a leg up with good sentiment. But I guess we'll have to see. So that being said, I want to thank you guys for joining and participating in the chat, and I'll see you guys next time. Please like and subscribe.
Don't forget to hit the bell icon.
Later, guys.